Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
Expose everything you won't admit. And action. This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh. But to fans all over the world, she's the YouTube star Superwoman.
What if everyone's a girl? Superwoman. I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada was like, Canada, is your daughter making videos? And the mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're going to go to school and then graduate and then get married and then get a job and then have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010, and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms, and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad, and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi, Lily, where the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name. Maybe this should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up.
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views, the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime. You know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left the Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play, because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas, and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change, but the ocean can also be a solution, because we know that the more life that is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forest, seagrass beds, all of these are important ecosystems in the ocean that are similar to the forests on the land, that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects a migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission: track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sales to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabasaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life.
Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I skipped Friday's Eve. I just went straight to Friday.
You were busy in Margaritaville.
Yes, indeed, man. It's 5 o'clock somewhere. It is. I feel. Well, it's 5 o'clock over in the G7, isn't it?
It is. 2 o'clock here, though.
Yeah, exactly. All right, we got lots going on. This is Bloomberg Business Week on this Friday, June 11th, here in our Interactive Brokers studio, streaming on YouTube. Fade out. That's kind of the equity trade today. Stocks and benchmark bond yields holding around the lowest since March. I feel like we are already counting down to the Fed meeting next week. What will the Fed say? Are they getting ready to kind of change policy?
Well, it seems like equity investors and indeed fixed income investors, they're certainly believing the Fed's story that any inflation that we're seeing right now, and look, that print came in really hot yesterday. That's the T word, transitory.
T with a capital T. We're going to talk about that. We're going to also talk about meme stocks moving west, the life cycle of a SPAC, a vaccine cocktail, and a rarity in the world of classical music.
All that and more coming up in the next 3 hours. In the meantime, a check of the trading day with Charlie Pellet.
Hi, thank you very much. Happy Friday. Hey, we've made it through the week. Here's what's going on. Let's begin with the meme stocks. We've got AMC up 13% right now. GameStop up today by 1.8%. Wendy's shares lower by 2%. Stocks are trading mixed right now. S&P back in the green. I'm looking at green for NASDAQ as well. The Dow remains lower. Dow Jones Industrial Average down 52 now, a drop of just about 0.2%. S&P up barely, up by half a point. We've got NASDAQ up 16, higher by 0.1%. 1%. Stocks fluctuating right around records. Benchmark bond yields holding around the lowest since March. Looking at the 10-year now, 1.45%. Investors continue to assess the outlook for inflation, along with the path of Federal Reserve monetary policy. As Carol mentioned, we've got that Fed meeting next week. Gold down by 1.2%, $18.75 the ounce. West Texas Intermediate crude up 1.1%, $71.09 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Bella, thank you so much. Let's get to the Market Drivers Report. And let's set that Business Week agenda, the Friday Business Week agenda. Dave Wilson in the house, stocks editor at Bloomberg News, right next to us in our Interactive Brokers studio. Vince Signorella, global macro strategist at Bloomberg News, on the phone from White Plains, New York. Vince, I'm going to kick it off with you, man. What a week. Feels like it was 2 weeks for me. How did it feel on your end?
Oh, it's at least 2 weeks. It's really a silly week. I mean, markets really couldn't figure out up from down this week. Everything that started the day would reverse, and vice versa. I mean, if markets overnight gains last night shed all through this session, and yesterday was the opposite effect. I mean, it's just the market cannot find any conviction. The only conviction out there is fixed income traders who are short treasuries and are covering, and they keep covering, and it's just going to be one of those trades, I guarantee you, when they all cover and they're all out, rates are going to go back up again, and they're all going to be banging their heads against the table.
So so that is the reason that what we're seeing with bond yields. That's the reason, and it's not the fact that investors are believing the Fed.
Well, it's not that investors do not believe the Fed. I mean, we saw a nice Goldilocks number come out today, as they are, right? Sentiment index is higher, but inflation expectations moderated from last month. So we're not really feeling the bite of inflation, and I think markets got a little ahead of themselves. We pushed 10-year yields up 100 basis points in a very short period of time, from around the 70-75 level to the 170-75 level. We're just coming back to sort of a middle. I don't think there's that much more for them to go down. I mean, expectations, what they are, you're still dealing with a $2 trillion plus deficit where we are right now and growing, and $30 trillion in overall debt. So there's a lot out there to absorb.
Right, exactly. Maybe we grow our way out. I'm just the optimist there. Dave Wilson.
You are. Glasses half full Masser over here.
Alice in Wonderland. I got my rose-colored glasses.
Meanwhile, I'm Chicken Little. The sky is falling.
Dave Wilson, where are you in all of this?
Just watching the market. That's the thing. I can be an observer and not have to make a decision about where things are headed next.
But what does the market show? When you look at the equity trades, does it tell us kind of what's on the mind of equity investors?
Yeah, it's a good question, because it doesn't seem like, there's a real pattern to things as often emerges, big tech leading the way, or some of the more economically sensitive areas of the market leading the way.
At the S&P 500, we're down, right? We took a leg down, and yet there are more names higher in the S&P than are lower.
That's right. And, there's really kind of nothing that emerges from looking at the industry group, except I'll note that healthcare, which had a pretty good couple of days, is the worst performer among the 11 main industry groups in the S&P 500. So giving back some of that advance. And you look at the individual stocks, you see Vertex Pharmaceuticals, which stopped working on a liver treatment. It's down 10%. Insight, regulators put off a decision on the company's skin cream for atopic dermatitis or eczema. So that stock's down 5.5%. Then there's Biogen, which had run up earlier in the week after getting clearance for its Alzheimer's drug. So had Eli Lilly, which is working on a competing treatment. So those shares are lower. I mean, so you have those kind of stories to hang on to. But in terms of taking away broader meaning, not so much, especially with the S&P 500 little changed at the moment. The one thing you can say, though, is that we're still hanging around records. So that's not nothing.
So, Dave, what do you watch for over the next few weeks as we get into this period where most of the companies that we follow are done reporting earnings? The quarter ends in just a few weeks. We start to hear from the big banks. What are you watching for? What are you listening for?
Well, it comes down to whether companies say much about their second quarter. So, in other words, if what they're seeing is at odds in any serious way with analyst estimates, and they have to come out and either raise or lower projections, in essence. So that's going to be something to watch. And then just, what's the backdrop look like? Are interest rates moving up or down? And does that become an issue, especially as the inflation picture plays out? Those are the kinds of things you have to pay attention to while you wait for the quarter to conclude and then the results to come starting a couple of weeks after that.
Hey, Vince Signorella, so what's on your radar? FOMC, I might be subtle about?
Yeah, I guess.
It's exciting.
It's really not going to be any change from anything. The
Do you
Fed's
think they're going to be pretty mellow and just kind of stay the course?
They absolutely better be, or markets are going to just get ripped. If they come out next week and make any suggestion towards their thinking about tapering, the equity markets will get hammered, and all those people covering shorts in the 10-year are really going to hurt themselves because we're going to be back to 1 3/4 in a heartbeat. I mean, if the market for any reason thinks the Fed is in somehow in any way, shape, or form slowing down quantitative easing, these markets are they're not prepared for that, even a little bit.
Listen, big moves. U.S. yield set for the biggest weekly drop in a year. So we have definitely seen, I feel like the Treasury trade has been the story. All right, guys, have a great weekend. Vince Signorella, global macro strategist at Bloomberg News. Find him at SQUA Go on your launch pad on the Bloomberg terminal. Dave Wilson's going to be back later on. Hopefully he's going to change a tie and put on one of his classic Dave Wilson ties.
Hopefully I'll get the song again.
And hopefully you'll get the song. I heard you were a mega winner.
I got a little feedback.
Bonus
Some
round.
friends texted me yesterday. He's like, hey, he said, you're now 1 for 100. That's what he said to me. I was like, oh, thanks.
Nice friend.
Yeah.
All right, let's do the Business Week bite of the day.
It's one number that tells us a lot. Brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
All right, let's get to the number 1,072. The Hoover Dam's reservoir level has plunged to its lowest since 1937 as the worst drought in decades grips the Southwest. According to the U.S. Bureau of Reclamation, Lake Mead fell to 1,072 feet on Wednesday as the flow of the Colorado River dwindles. The dam's capacity, normally 2,000 megawatts, Tim, slipping 25% to 1,500 megawatts. This is why this becomes a problem.
Yeah, I think the drought story is one that's certainly undercovered right now. Californians know what I'm talking about. It's a story that I grew up with in California, and it's one that has stuck with us throughout my entire life.
It's why your family's heading east right now?
Exactly, getting to where the water is.
All right.
Opposite of the Oregon Trail.
Exactly. We have so much to cover. The new issue of Bloomberg Business Week is out, so we're going to go through it. We're going to open it up with an editor of the magazine. We're also going to hear from Blackstone Group President John Gray.
And in search of higher immunity, how about a COVID-19 vaccine cocktail? That's being tested right now.
I think this is so interesting. And making sense of the life cycle of SPACs. We'll get into that with the CEO over at River North. In the meantime,
let's get a check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. G7 leaders have been tackling several tough issues as they meet on the Cornish coast of southern England. British Prime Minister Boris Johnson is serving as host. He says they need to focus on the global economic recovery from the pandemic.
I think what's gone wrong with this pandemic, or what risks being a lasting scar, is that I think the inequalities may be entrenched. And we need to make sure that as we recover, we level up across our societies and we build back better.
Johnson says it is important they heed the lessons they learned during the pandemic. Russian President Vladimir Putin is giving his first U.S. TV interview since July of 2018. NBC's Keir Simmons is interviewing Putin in Moscow just days before Putin meets with President Biden. The interview will air Monday on NBC's Today Show, MSNBC, and the NBC Nightly News. Well, Senate leaders are demanding former Attorneys General Bill Barr and Jeff Sessions testify about the seizure of data from Democrats. Congressman Eric Swalwell reportedly had his data seized by the Trump administration as part of a leak probe. He tells CNN former President Trump weaponized the Justice Department to dig into the private communications of his opponents.
And I hope Trump supporters who fear Big Brother see that Donald Trump was the biggest brother we've ever seen in our country, who did weaponize this to go all the way down the stack into, the private communications of people he perceived as political opponents.
Swalwell says he supports the investigation. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Massar, Tim Stenevec in our Interactive Brokers studio. It is the Friday edition of Bloomberg Business Week. Let's go, though. We're going to talk about one country and what they're doing to overcome COVID. But in the meantime, there were some Moderna headlines The stock is off its highs today, but Tim, that certainly caught both of our attention.
Yeah, the company just a little earlier today saying that it doesn't see signs that a shot causes heart issues. It says that scientific evidence it has reviewed doesn't suggest that its COVID-19 vaccine was the cause of a heart condition in some people who received it. The drug maker saying on Friday that after reviewing the available safety data on its shot for cases of myocarditis and pericarditis, it, quote, has not established a causal association with its vaccine.
All right, and this is interesting, right? Because this has been one of the developments. We've been certainly talking about it with those that come on from the medical community to kind of get an idea. Listen, we're finding our way through this, and so far, knock on metal here in the studio, that things for the large part have been good, but nonetheless, we're learning.
Well, the concern was with these mRNA vaccines, the messenger RNA technology, the ones that are used by Pfizer and Moderna, that heart inflammation could be some sort of association. The CDC has identified a total of 216 cases of heart inflammation after the first dose of an mRNA shot, and another 573 cases after the second dose.
The median age of people with myocarditis or pericarditis following the first dose was 30 and 24 in the second dose cases. There were 475 cases among people under 30. So just something we'll talk about with Dr. Ian Lustbader. In the meantime, there is another story on the Bloomberg that talks about what's going on in Paraguay. They are saying that what they are doing is they are actually publishing those who get the vaccine. There's a public database that lists the person's name, place of vaccination, type of vaccine, and number of doses. So this is how they are fighting vaccine corruption specifically.
Yeah, so if you scroll through, you'll see the ex-president got his first shot of the Sputnik 5 on May 19th. Also, Carlitos Vera, a well-known Paraguayan comedian, received the Covaxin jab.
And I guess what's interesting is there are people who looked at the list and reported individuals who got vaccinated who weren't eligible. So that's what this is all about.
Kind of happened here in the U.S. in the beginning, too.
It did. This is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Friday, we've got the S&P up barely, up by about half a point right now. Little change there. NASDAQ holding on to a 22-point gain, up 0.2%. The NASDAQ 100 index up 0.1%. The Dow remains on the minus sign, down 41, drop there of 0.1%. 10-year yield right now 1.45%. Stocks are retreating from records. Bottom line, little change. Benchmark bond yields holding around the lowest since March as investors continue to assess the outlook for inflation, along with the path of Federal Reserve monetary policy. Gold is down $22 the ounce. That is a drop of 1.2%. Gold now at $18.76 the ounce. Bitcoin up 1.1%, 36,881. And West Texas Intermediate crude up 1.1%, 71.06 for a barrel of WTI. Story we're watching this Friday. Sources tell Bloomberg customer survey software provider Medallia is exploring options, including a potential sale. Medallia, based in San Francisco, shares right now up by 14.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, among the COVID stories that are catching our attention, we've got one about how pharmaceutical execs are mixing up their own vaccines to get at a higher immunity. So maybe think about a drug cocktail. And then, Tim, of course, those Moderna headlines.
Yeah, the company's saying that it doesn't see signs that its shot causes heart issue, the issue myocarditis, as well as a condition called pericarditis. The company's saying it has not established a causal association with its vaccine. Well, let's get right into it with Dr. Ian Lusbader, clinical professor of medicine at NYU Langone's Medical Center, joining us this afternoon on the phone from Long Island. Dr. Lusbader, how are you on this Friday afternoon?
Doing very well, guys. Hope all is well with you. Definitely some interesting stories. That doesn't seem to end when it comes to COVID and the vaccines.
Yeah, it doesn't. Well, let's get right into it and talk about the mRNA vaccines, because the Centers for Disease Control and Prevention, it's identified a total of 216 cases of heart inflammation after the first dose of an mRNA shot and another 573 cases after the second dose. At the same time, Moderna coming out and saying that it sees no sign that the shot causes heart issues. How are you reading into this?
Well, there's definitely an increased incidence, right? We certainly know that myocarditis, which is inflammation of the heart muscle, and pericarditis, which is the sac that the heart sits in, can occur. It can occur at any age. We see viral inflammation of the heart. We see usually viral or other infections that cause pericarditis. But the number of cases, especially in young men, those under 30, is definitely higher than one would statistically think of in that population. So there's definitely an increased incidence, and it seems to be associated with the mRNA vaccines. What we don't know is, are they causing it or how they're causing it? The CDC, I think, is definitely looking into that. And this raises the question of, as we're getting more data, should we be kind of targeting vaccines for certain age groups? Maybe young men should be thinking more about the J&J vaccine, the single dose, as opposed to young women, where we were seeing some perhaps increased clots with AstraZeneca or this TTS syndrome with J&J. You know, perhaps young women should be thinking more of the mRNA. We're really just sort of getting that data. And at some point down the line, hopefully soon, we may be able to say, if you're in this group, this would give you the most benefit with the least risk. Clearly, these are not a huge number of cases, but obviously higher than we would expect. And you always try and reduce risk whenever you're giving any sort of treatment or prevention.
So, Dr. Lusbader, are we getting to the point? It was funny, I was having a conversation, a little parenthetical here, earlier, and someone went to get the vaccine. They're like, well, wait a minute, because they were going to be given the Pfizer. They're like, can I actually have the J&J? And they were able to kind of pick the vaccine they wanted. On the flip side, are doctors getting to a point, the medical community, saying, you know what? I've looked at your medical history, I've looked at your age, I've looked at some other factors. I think you should get this vaccine.
There are some patients who say, what should I get? And most don't really check in before they get it. And many centers don't have it's not like a restaurant where you can say,
it's not a buffet,
this one or that one. I mean, at some point we may get to that, but usually if you go to a particular center, whether it's even a local pharmacy, they will have a limited number of vaccines, due to storage and other issues. And really for the majority of people, they're all very effective. Very, very few people actually get COVID. A Cleveland Clinic study just showed that. They looked at 52,000, patients, not only who've had COVID previously, but those with vaccines. So for most people, it doesn't matter. But if you are in one of those groups, a young woman or a young man, now that this data is coming through, it may be worth talking with your doctor and saying, hey, based on the data, is there one that may be better for me?
Well, let's talk a little bit more about that Cleveland Clinic study finding. The idea is that there's not necessarily proof that we should be vaccinating those who have had COVID-19. Take us into it.
Exactly right. So that study, and it's from a very reputable institution, the Cleveland Clinics, looked at about 52,000 employees. And a certain percent had COVID previously, and they looked at those who were vaccinated and those who were not vaccinated, and it turned out that really zero people who had the COVID infection, the SARS-CoV-2 infection, and had proof of having that, they did not get a second infection. So you can't get better than zero, out of 52,000. So that's very reassuring. We have been pushing even people who've had the COVID infection to say, hey, you take this.
That's exactly why I was so skeptical when I saw this, and then so surprised when I saw this, because it flies in the face of what we've heard from the CDC.
Well, it's an evolving picture, let's put it that way. I think for people who've had it, they should be very reassured. There's some, debate, in terms of vaccine availability. Should we be using all these vaccines when other countries may need them? But I think if you've had COVID, your risk of getting it again is very low. We certainly know the vaccines really boost your antibody response. And for new variants like Delta, that's, from India, that could be a problem. It may be that a vaccine would be very helpful for that. I would say, right now, if you've had COVID, there's no panic to get a booster shot, although it probably will provide some benefit.
All right, good stuff. Hey, we're going to continue this conversation with Dr. Ian Lustbader, clinical professor of medicine at NYU Langone, with us on the phone in Long Island. Tim, listen, it's, as he said, this is evolving. We're finding our way through this.
Yeah, I've said it before. I'll say it again. It's like a science experiment, a study playing out in real time. And in a sense, all medicine is like that, I've learned, right?
Right.
Look at what happened with Alzheimer's and Biogen this week.
Right, exactly. But the time frame on this one has been condensed.
Absolutely.
And so maybe we all are feeling it more. We're going to get back to Dr. Lustbader in just a second. You're listening to Bloomberg Business Week. It's Friday. It's Carol Masser. It's Tim Stanovic. And this is Bloomberg Radio.
Okay, guys, traders, I decided to place order to sell short Bitcoin. Okay, the price I'm looking to sell, 37,026. So 37,026. This is the price I'm looking to sell short. It's not even here. It's above this level. I'll show you where I'm looking to sell. So if you're looking to trade Bitcoin, please do so. Please place an order and stay with me. It's Friday evening. Hopefully you already done all things during the week and you're relaxed. We're still working because market never sleeps. Yeah. So if you want to trade Bitcoin, here's your chance. Place an order and follow our trades. Okay. Stay safe.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Two stories I want to get to: vaccine cocktails, and I want to talk about Biogen's development today.
Yeah,
or this week, I should say.
We're going to talk to Dr. Ian Lustbader and the fallout from that as well. Yeah, the FDA advisory
that was
panel,
quick, right?
Exodus was quick. Pharma executives are seeking a higher immunity by mixing their own cocktails.
Vaccine cocktail.
Yeah.
All right, we'll get to that with Ian in just a moment. First up, back to your top business stories. Another look at that trading day. Hey, Charlie Pellet.
Well, hello there. Happy Friday. Let's hear it for cocktails. We've got the Dow moving lower now. The S&P, NASDAQ, they are both higher right now. Little change. That's the bottom line here. We've got the S&P up 2 points, 42.41, a gain there of about 0.1%. The Dow down 32, down 0.1. NASDAQ up 25, up by 0.2%. Your 10-year, 1.45%. 10-year yield there. The 10-year now down 8.30 seconds. Gold down 1.1%, 18.76 the ounce. And West Texas Intermediate crude up 0.9%, 70.95 for a barrel of WTI. Bottom line here, stocks are trading mixed, choppy session. Benchmark bond yields holding around the lowest since March. Investors continue to assess the outlook for inflation along with the path of Federal Reserve monetary policy. 10-year yield again 1.45%. Gold right now down 1.1%, 18.77 the ounce. Crude up 0.9%, 70.95 a barrel on WTI. UK infections continue to rise, posing a dilemma for Prime Minister Boris Johnson ahead of a crunch decision on Monday on whether to proceed with the final stage of reopening the economy later this month. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health. He says one of his big concerns right now is the spread of COVID variants.
Well, all we have to do is look at the situation in India and Nepal, and now we just look at the situation in the United Kingdom, where variants of COVID-19 have become the dominant virus in those populations. In the UK, despite a somewhat effective vaccination campaign.
And Dr. Andrew Pekosh of Johns Hopkins. Hopkins, by the way, the School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine names that we track on a regular basis, they're all lower today. Pfizer tumbling 1.3%. Its German partner BioNTech, the ADRs, down 1.8%. AstraZeneca's ADRs down 0.1%. Moderna out of Cambridge, Massachusetts, down 0.2%. J&J, Johnson & Johnson, down 1.3%. Again, recapping, stocks trading mixed, S&P up 2, up 0.1%. I'm Charlie Pellet, and this is Bloomberg Business Flash.
Thanks so much for that, Charlie Pell. Let's get back right to it with Dr. Ian Lustbader, clinical professor of medicine at NYU Langone's Medical Center. He joins us on the phone from Long Island. Dr. Lustbader, a story by our own Todd Gillespie that came out earlier today, all about how pharmaceutical executives are kind of, the way I thought of it was doing experiments on themselves in trying to determine whether or not they can get a higher immunity from a mix of their own COVID shots, different vaccines. And it's actually something that it's new to me, but it's not new to doctors and people who study this stuff. It's called heterologous prime boosting. What exactly is it, and what are these executives doing, and how could it affect the way that we receive vaccines in the future?
So we've known for a long time that the heterologous prime boosting, basically giving one vaccine, then followed by a different vaccine, really gives you a more robust response. All of the original studies just looked at individual companies doing their own testing. So obviously, Pfizer was 3 weeks apart, Moderna 4 weeks apart. J&J just the single vaccine, although there were some studies that showed a follow-up. But it turns out if you combine these, for example, there are a number of studies that show not in a limited number of patients, hundreds of patients, the studies have been done, but they show, for example, like the AstraZeneca, which is an adenovirus vector, similar to J&J, if you give that followed by either the Moderna mRNA or the Pfizer mRNA vaccine, they had up to 7 times higher antibodies and longer lasting.
Wow.
And the hope, it's quite impressive. And that may be the wave of the future. That may be the standard approach. And certainly patients who say, gosh, I missed my follow-up dose, I was away, I couldn't get it, can I get a different vaccine? I think the answer is yes, you can, and that may be a good idea, actually. But the concern or the reason you may want these higher antibody levels is exactly for the Delta, Indian variant, which is more infectious, more deadly. It continues to multiply and mutate. Obviously, you've got 1 billion people as your substrate of viral replication. So the thinking is that if we combine these, we'll get a more robust response that hopefully would defend the body better against any variants that come along. That's not proven, but that's the thinking.
Yeah, and we continue to find out more and more. Hey, listen, before we go, we have a couple of minutes left, and we've got to ask you about Biogen and its Alzheimer's drug. One of the stories today, a prominent Harvard Medical School professor has resigned from an FDA advisory panel in protest over the agency's decision to approve Biogen's Alzheimer's drug. And so he announced his departure. He put out a letter. He's the third committee member to quit in the wake of this highly controversial approval. And forgive me, this happened yesterday. How do you feel about this, or what are you hearing?
Well, I think they're trying to be ethical about this. And Alzheimer's is a very tough disease. It's very tough to really prove benefit from these drugs. This particular drug was approved by the FDA because it lowered the levels of amyloid, which is a protein in the brain. Alzheimer's is complicated. There are many biochemical and physical changes in the brain, amyloid deposits, neurofibrillary tangles. And so the drug did reduce amyloid, but it's very hard to really prove benefit because Alzheimer's is a progressive disease. Typically, valid, and they were going on kind of a different metric. Maybe a useful metric, but I think that committee wanted more data.
And anybody who's had a family member who's had Alzheimer's or even some other illness, if you can get a couple months, a couple weeks, a couple years out of a treatment, it means an awful lot. And that's where it's really gray and fuzzy, Tim.
I think that's perhaps why, despite the fact that it's $56,000 for treatment plus more, investors saw it as something that is tenable.
Right, exactly. And there's a lot of folks out there with Alzheimer's as well, of course. Dr. Ian Lustbader, the best, clinical professor of medicine at NYU Langone, joining us on the phone from Long Island.
Let's get a quick check of world and national news. Nancy Lyons is in our Bloomberg 99.1 newsroom in D.C. Hey, Nance.
Hey, Tim. G7 leaders have been tackling the economy as they meet in the UK. British Prime Minister Boris Johnson is the meeting's host.
I think there is the potential to generate many, many millions of high-wage, high-skill jobs. And I think that is what the people of our countries now want us to focus on.
Johnson says any recovery needs to focus on building back greener and more equal. Some, but not all, of a troubled vaccine manufacturer's Johnson & Johnson COVID shots will be allowed to move to the market. Bloomberg's Nathan Hager has more from Washington.
Sources tell Bloomberg News the FDA is authorizing 10 million emergent-made doses of Johnson & Johnson's vaccine to be released. In a statement, the FDA says after a thorough review of Emergent's facility, 2 batches of the vaccine's underlying drug substance will be released. The manufacturer has said it's made more than 100 million doses worth of the vaccine's bulk drug substance. For months, that supply had been in limbo after Emergent staff accidentally contaminated millions of doses. In Washington, I'm Nathan Hager, Bloomberg Radio.
Vice President Kamala Harris will be traveling to South Carolina Monday to kick off a national COVID vaccination tour. The goal is to help get 70% of Americans at least partially vaccinated by the 4th of July. She'll begin her week-long tour in Greenville, South Carolina, and wind up the week in Atlanta. McDonald's says its operations in South Korea and Taiwan have been hacked. The fast food giant warned some customer and employee information was exposed. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Yeah, put Palm Beach billionaires,
Yeah, you're missing a letter there.
and sinking mega mansions in a headline, and you're going to get a lot of most reds on the terminal.
Yeah, a lot of people sharing this on Twitter earlier today. Palm Beach billionaires' fix for sinking mega mansions: build bigger.
Well, here's what's going on. Listen, you take a look basically at waterfront real estate prices, specifically if you look at Palm Beach, there are gorgeous homes there. And that's an area, the town of Palm Beach, busy adapting to the risks of a warming planet, even if there appear to be fewer worriers, I should say, among the buyers and speculative builders on the island. Basically, some of the lowest lying properties in the U.S. are seeing the highest flying prices. And this story gets into, during the first quarter of this year, homes at high risk of flooding sold for a record 13.6% premium over less risky homes, according to the brokerage Redfin. And this is, of course, a lot of waterfront real estate. But if you're a billionaire, you know what? You have a lot of money, you don't care, or you're kind of older maybe, and again, you don't care. It's not my problem.
It's one.
And that's not my opinion.
That's not your
in
opinion.
the story.
That's in the story, exactly. Wrestling with the long-term consequences falls to the town of Palm Beach, which is reliant on property tax revenue in a state with no income tax. Florida's rising waterfront prices reliably fill government coffers. For now, violent storms and more frequent flooding, though, threaten to eventually wreck both home prices and municipal finances. The question is who, in the end, Carol, will bear the cost.
Right, exactly. And this is kind of what you're seeing. There's a billionaire building boom in Florida. There's a great chart. Go to Bloomberg.com, and it takes a look at 2020. It's just kind of off the chart in terms of the building that you're seeing on that waterfront. We've talked about the rich getting richer, and they're building homes, they're buying yachts, they're doing lots of things. But you do wonder what this ultimately will mean to kind of waterfront area that does rely, you say, on real estate property.
Okay, so let's briefly go over some of these numbers because they are massive. In 2018, the taxable value of new real estate construction in Palm Beach was a paltry $59.9 million. In 2020, $267.4.
That's a big change. Anyway, we're going to tweet this story out. If you haven't seen it, maybe Tim has already, but I'll put it out there on Twitter as well. This is Bloomberg.
I'm placing a new order to buy Japanese yen. If you're looking to buy Japanese yen, here is your chance, 109.723. This is the price I'm looking to buy it. So please place your order if you copy my trade if you want to trade Japanese yen. Okay? Okay, just right here. Okay, stay safe.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Trading today, benchmark bond yields holding around the lowest since March. Right now, 1.46% on the 10-year as investors continue to assess the outlook for inflation along with the path of Federal Reserve monetary policy. S&P swinging between gains and losses, up right now, up by 2 points, a gain of about 0.1%. The Dow lower by 40, down 0.1%, while NASDAQ is up 27, a gain of 0.2%. Gold down $21 the ounce, a drop of 1.1%, 1876. West Texas Intermediate crude up 0.7%, 70.78 a barrel on WTI. McDonald's says hackers accessed some customer data in South Korea and Taiwan, adding the fast food chain to the growing list of companies grappling with cyber attacks in recent weeks. McDonald's shares up by 0.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the new issue of Bloomberg Business Week, it's in my hands. It's now on newsstands. It's in Tim's hands. It's online and on the Bloomberg. The domestic cover asks, who needs a margarita?
I do.
After this week. I think we all do. That story and a bunch more, including the international cover, China Wolves and the new age of ESG. Let's open up the issue with Bloomberg Business Week editor Joel Weber on the Access Line in Brooklyn. But before we do that, Joel, congratulations.
Oh, thank you. And you're referencing a National Magazine Award that Bloomberg Business Week won last night for a single topic issue that we did last spring called The Lost Year, which, if you look at the cover of it, we used that cover line on the issue that shipped March 11th. Which was as the world was sort of felt like it was falling apart, or at least here in New York it did. So it was a huge honor to accept that on behalf of the staff in Bloomberg. And
it was prescient. I'm just going to say it was prescient.
Yeah, it definitely feels that way. It's, I think I fretted for most of the year about, was it going to be less than a year? Because that would look bad. Is it going to be more than a year? But it turns out it was a bold call and the right one. And, I think the thing that these are kind of the Oscars of the magazine world. And it means that, our peers basically said this was you at your best, which we felt as well. So, again, quite an honor.
Yeah, and Joel, one more question on that, because this is such a big deal. And as Carol mentioned, it was really prescient of you and your team. And I'm wondering what it was that made you realize, look, 15 months ago at this point, that 2020 would indeed be a lost year.
Well, I was in a meeting, and being in that meeting and realizing how so many people were confused and made me realize that same conversation was happening in boardrooms across the country and the world, frankly. And as people were just doing complete write-offs for what their projections would look like, that would be a pretty devastating year for the economy, and so that was the kernel of the idea. And I remember walking out of that meeting and not sure if I wanted to do a cover-to-cover issue. And I walked out of that meeting thinking, not only are we doing a cover-to-cover issue, but we're calling it the lost year.
Well, it's kind of a perfect segue into this week's edition, which I think in a lot of ways symbolizes the reopening of New York City. The cover here in the
That's exactly right. So the cover story is about Jimmy Buffett, who most of us know as a musician, and I'm quite fond of that music, for the record. And he actually turns out that he has a business empire that basically has been the legacy of the song Margaritaville. And not only has it just boomed, it's expanding, and he's just opening a New York Times Square extension, Margaritaville Hotel with restaurants and bars and everything. And the timing couldn't be better, because just as New York's coming back to life, you've got a place to go have margaritas and daiquiris in Times Square.
We've been planning a road trip, a class trip.
What about just like an offsite broadcasting from there?
I mean, why not, right?
Why not?
Yeah, or just a meeting even. Like, I'm done with the Zoom stuff. Let's just go see each other face to face.
But it's crazy, right?
It's
a song he wrote.
Charming.
It's crazy because it's a song he wrote in, what, a few minutes?
Yeah, and it actually, you know, there's so much business wisdom in this story of, like, he realized he had something, but he couldn't do it on his own. Found somebody who became a great partner and realized that they could put their brand on a lot of different things. And I think they're still figuring out what they can put it on. And, you know, marijuana to daiquiri machines, they've really been able to do it all.
All right.
Go ahead, Carol.
I was going to say, I don't have a great segue to the next story, but we've talked about this story.
Just have another drink of your margarita and you'll figure it out.
That's it. Well, maybe the Chinese wolf warriors need to have a margarita.
Okay, we can talk about that one. So Peter Martin wrote this story. He's got a book coming out. So this is technically an excerpt. So congrats to Pete on this book. We obviously know that the wolf warriors have become like a diplomatic strategy of China's, and they're very aggressive in expanding China's influence and showing that there's a lot of bark, at least, with where China wants to go, and perhaps some bite even. And as Pete writes, it's a bold strategy, but despite some rhetoric from the top in Beijing, like we shouldn't expect any of that to back down anytime soon.
Joel, there's also a story in this week's edition of the magazine, a deep dive into the Exxon activist victory, marking a coming of age for ESG investing. Take us into it. Engine number one.
This is a Sejal Kashan story. She worked with Joe Carroll on it, about a thing that I don't feel very many people saw coming. I mean, I certainly didn't. When the name Engine Number One was first uttered in the meetings that I was in, it was sort of like, who the heck is that? And it turns out that not only were they activist investors, but it kind of shows a new age of activist investors, that they're willing not only to take on companies, and, you know, as we've written in cover stories in Business Week, Exxon 10 years ago was on top of the world. You know, there was no more valuable company than Exxon, and how the mighty have fallen. And as they're falling, we're seeing how activists can come in and attempt to probably work for more change. So it's one to watch, and one that I think has taken a lot of investors and boards by surprise. So I think definitely more to come in this vein going forward.
Yeah, massive undertaking financially, certainly for Engine Number One to take on Exxon. Hey, a story we've been also referencing, the FOMO economy. When Stanley Druckenmiller gets FOMO, you got to sit up and take notice.
Yeah, so this was one that we ended up doing as the international cover story. I thought it was good enough to be global, but that I just had to, you know, give everybody a margarita. The idea really came from me from just being on the playground and suddenly, you know, watching my son and having all these people that I interact with telling me about how they've struck it rich. And I was like, am I the only one who's not rich right now, or getting rich? Like, what am I doing wrong? And Lionel Laurent, who's a great contributor in Bloomberg Opinion, wrote a story that basically helps sum all that up, whether it's Dogecoin or housing or meme stocks. And, you know, a week ago right now, we were talking about AMC, which was on fire. You know, all of it just feels like, boy, I just feel like I've missed out on everything. And if you've ever been taught, like, you know, sane approaches to investing or index funds, I think you probably feel the same way, which is just like, wow, what's going on?
Exactly.
Yeah, you're not the only one, Joel. Hey, just in 15 seconds that we have, take us down to Florida's Trump Coast with Josh Green.
The Josh Green story is an epic one. It was just like the moment that we knew Mar-a-Lago was a destination, we said, Josh, can you go down there and just like give us a cultural letter from South Florida? And he did, and I think he found some really surprising stuff that was shows how strong Trump's hold on the GOP is.
All right, everybody, there's your weekend reading list. Check it out online, on newsstands, and on the Bloomberg. Joel Weber, thank you so much. Congratulations again. That issue was incredible. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, we're going to come back, Tim and myself, on Business Week. If you're listening on Bloomberg 106.1 in Boston, Bay State Business. That's next.
Okay, guys, as you can see, we have opened two positions. One on Bitcoin. Yep, this is short position at 37,026. Let me change the color to red one. Okay. And also, I'll show you the arrow where exactly we opened, right here. And also on Japanese yen. Okay, and the price on Japanese yen, we placed an order to buy Japanese yen 109,723. Okay, and I'll point the arrow to this direction. Okay, so well done, guys. If you decided to follow this trade, if you decided to trade this late Friday, good for you. And stay with me. It's not the end of the trading session, so there's plenty of time make profit. Okay? I'll speak to you later, guys.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. We move into the final hour of trading on this Friday, June 11th. We've got the Dow lower, S&P, NASDAQ 100 index, Russell 2000, Dow Transports, all on the plus side. Bottom line, no choppy day. Stocks mix. Benchmark bond yields holding around the lowest since March, 1.46 right now on the 10-year, as investors continue to assess the outlook for inflation and the path of Federal Reserve monetary policy. Alicia Levine is chief strategist at Bank of New York Mellon.
What this means is that the Fed has sold its story. And the Fed has convinced everybody that they're going to roll with it, that they're not going to react to it, and they're simply not moving for a couple of years on the rate side. And that's what this all means.
S&P 500 index swinging between gains and losses. Alicia Levine, by the way, with Bank of New York Mellon. S&P hovering around a record in afternoon trading. Tech and financial stocks lifting the index. Biotechs among those weighing it down. Vertex Pharmaceuticals falling the most after halting development on a key therapy. Vertex now lower by 10.3%. McDonald's says hackers access some customer data in South Korea and Taiwan, adding the fast food chain to the growing list of companies grappling with cyber attacks in recent weeks. The company says it will also be taking steps in some markets, quote, to address files that contain employee personal data. McDonald's shares, they're up now by 0.9%. Sources tell Bloomberg customer survey software provider Medallia is exploring options, including a potential sale. Those sources say the San Francisco-based company is working with a financial advisor, and private equity firms have expressed interest in buying the company. Medallia shares up now by 15.7%. Recapping 10-year yield 1.46%, S&P up by 2 points, up less than 0.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Carol Masser, Tim Stenovic in our Interactive Brokers studio. So underway along the British coast, the group of 7 leaders meeting 3 days of summitry after meeting U.S. President Joe Biden for the first time yesterday. Once again, though, Tim joining us with an update on the festivities, the pomp and circumstance, and the relationship and impact of the G7, because that's what we really care about.
It's none other than Guy Johnson, anchor at Bloomberg Television. He joins us remote from Cornwall, England. Guy, it's great to have you back on the show this afternoon. Give us an update of everything that's happened so far today.
Go. You have 5 minutes.
Okay, 5 minutes.
Kidding.
Yeah, let's talk a little bit about what's happening right now. So they've all kind of decamped and gone over to the Eden Project, which is a huge kind of botanical gardens that is around 20 or 30 miles away. There they are having dinner, all the leaders with the Queen. We've got Prince Charles there. He delivered a speech a little bit earlier on. Kate and William are there as well. So you talk about pomp and circumstance, Carol. That's what we're seeing this evening. Earlier on in the day, we had the family photograph when all of the leaders were down on the beach, beautifully combed beach, looking fantastic. Joe Biden joking it was, I think, like being at a wedding, or maybe that was the First Lady.
The family picture and with the sunlight basking on them. What about what really matters, Guy? And this is the stuff that I've been thinking a lot about, whether it's Russia, whether it's Putin, whether it's climate change, whether it's COVID. Any sign so far that President Biden has the gravitas to bring the U.S. back into the fold globally, really be a leader here?
Absolutely. So in some ways, this isn't a G7 summit. This is a President Biden hitting the world stage summit. This is his first big foreign trip, and the G7 is just part of it. Obviously, we've got the G7, then we've got the NATO, we've got EU summit, and then he's going to go and meet Vladimir Putin. Tomorrow, guys, that is when I think we're going to get really into the meat of it. There's 4 big plenary sessions coming up, 4 big meetings that are going to take place. And during those meetings, we're going to have a big discussion on China. It's going to be really interesting to see whether or not the United States and the EU are on the same page. I would point to Mario Draghi, the former chief of the ECB, now prime minister over in Italy. Since he's become prime minister, Italy has completely changed direction. It has pushed back China. It used to be very close to China. He's completely pushed back China. And he is kind of one of the key leaders here, along with Angela Merkel and Mr. Macron. So I think actually you will find some common ground there. I think you'll also find common ground on Russia as well. So there will be a sticking point on Nord Stream 2, this huge gas pipeline that everybody is watching so carefully to see whether or not that gets completed. So tomorrow's a really big day.
Guy, all of this, of course, happening with the worst global pandemic in any of our lifetimes happening right now. And I'm wondering what you've learned, what we've learned about how the G7 countries are going to help pull the rest of the world out of the pandemic.
So 2 key things happening here, Tim, one of which is what is going on in terms of the vaccine program. And there's a huge commitment to vaccinate people in the emerging markets, in the developing world. they're looking to get 80% of the world's population vaccinated by the end of next year. That will be a huge economic boost to the global economy. So that has huge benefits to it. There's also going to be an addendum to that. They're looking to provide financing, the Build Back Better program for many of these economies as well. So when they come out of the COVID crisis, they will have a more sustainable trajectory. And I think that's how you're going to link up the vaccine program and also the kind of the return to the green agenda. These economies, they're going to provide financing to help them come out of the pandemic, but it will be very much focused on the sustainability angle.
Guy, you are so good at kind of laying out what's happened so far, what's to come tomorrow, just so that we kind of know what to look for on our news feed Saturday morning when we get up. But I do wonder, you're on the ground. I always love when someone's on the ground. Just what's the feel? What's the tone? Because safe to say, and I'm not doing commentary, President Biden and his administration definitely different from a Trump administration. So what's kind of the mood and stuff? Yeah.
So that's the point. Look, I remember some of the meetings that President Trump had, particularly with Angela Merkel, incredidly tense. I remember this image of her kind of arms folded, leaning across the table.
That's exactly
really
what I was thinking of, right?
Yeah, a kind of iconic image. And this is very different. Look, the body language is really positive. Everybody seems incredibly friendly. Emmanuel Macron and the president, arm in arm, walking off the beach today. The only exception I would say is Justin Trudeau, who seems to be keeping his distance. The Canadians seem to be taking COVID segregation very seriously, even at this summit.
Wow, that's interesting to hear.
I think he's going to be quarantining when he goes back to Canada as well.
It's interesting. I mean, Canada was a little later too when it came to at least compared to the United States with administering vaccine doses. Guy, I want to hit on climate before you go, because this is obviously something that's very important to the Biden administration. He campaigned on it, but I do wonder if the American government can pull out of something like the Paris Climate Agreement with the stroke of a pen, as President Trump did, and then get back into it with a new administration. How the rest of the G7 countries view the United States' commitment to the climate right now?
Well, I think you've got to walk the walk. You can't just talk the talk, and I think this is going to be really critical. I think there is going to have to be sort of proof from the new administration that things have changed. I think there is a kind of lingering suspicion that actually America First really hasn't disappeared completely. And I think also one of the key sticking points is that I was talking to Charles Michel earlier on, who is the president of the European Council, kind of coordinates the EU 27, the leaders, and he was talking about a carbon price. Europe is kind of really pushing ahead with a carbon price. The United States has yet to do that. And I think it's that kind of concrete action that maybe the Europeans are looking for.
Right. Guy, what we really all want to know, did you get any time on the beach?
Not yet. Tomorrow.
Okay, good luck with that. Incredible reporting. You look up at Bloomberg TV or you listen to Bloomberg Radio. Guy has been all over it.
He was on Quick Take with us this morning, too.
Just keeping us exactly up to date on the comings and goings of the world leaders when there's so many big macro issues right now going on.
So the family photo is making the rounds right now, showing, of course, 9 leaders, because it includes some other folks there, including Ursula von der Leyen. But I do wonder why in this day and age, when many leaders have been vaccinated and they're outside, they still have to keep their distance. And I wonder if they're trying to show symbolically, but it's not necessarily something. It was something that I was still surprised to see.
Well, there was some stories talking about still Germany thinking about another wave because of the variant, and UK, I believe that there were cases going up again. So there's still some worries out there.
The Delta variant first identified in India.
Exactly. Remember, folks, there's still a global pandemic underway. All right, let's get to world and national news. Over to 99.1 Newsroom in the nation's capital and to Nancy Lyons. Hey, Nance.
Hey, Carol. The Justice Department's Inspector General is initiating a review of the department's use of subpoenas to obtain communication records of lawmakers. It follows a New York Times report that the department ordered Apple to turn over records of at least 2 Democrats who served on the panel investigating former President Trump. We get more on that from Bloomberg's government's Emily Wilkins.
There's definitely some concern about this among Democrats that a sitting president would try to subpoena members of Congress who are investigating him.
That's, again, Bloomberg's Emily Wilkins. Law enforcement agencies across the country have been experiencing a wave of retirements and departures. They're also struggling to recruit the next generation of police officers in the years since George Floyd was killed by an officer. The Washington-based Police Executive Research Forum looked at nearly 200 law enforcement agencies. Its director, Chuck Wexler, on what they found.
You're having less people applying You have more people resigning at a faster rate and retiring at a faster rate, which is creating a crisis on the horizon.
Wexler says retirements alone have climbed 45% in a year. The FDA is reportedly ordering Johnson & Johnson to throw out 60 million doses of its COVID-19 vaccine due to possible contamination. The New York Times says the agency will allow about 10 million doses of the one-shot vaccine to be used, but with a warning that the agency is not sure if the production facility followed good manufacturing practices. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Tim and I have been going at it because we're, when there's okay, we want to talk about Amazon, everyone.
I love talking about Amazon.
And when there's Amazon, there's never just one story. So let's first talk about our own reporting here by Spencer Soper, Matt Day, and Noah Buhire, because it has to do with getting back to work.
Yeah, Amazon wants office workers, corporate employees, to return to the office at least 3 days a week by this fall, taking a slightly more relaxed stance from its previous position of a return to a, quote, office-centric culture. I want to point out here that it's so important to remember that Amazon is a company that, in terms of the number of employees that it has so many more warehouse employees, fulfillment center employees than it does. Actually.
Can't do that from home, can you?
You cannot do that from home, and that's the thing. And there is this kind of dichotomy between. And look, it represents perfectly what the United States and other countries have gone through, where the wealthiest Americans and wealthiest people around the world have been able to work remotely. Well, those people who are required to be at their physical workplace in order to do that work haven't done as well.
Which makes me wonder, when we look at wage pressure, I'm going a little bit off topic here, but about inflation pressures, that they are in some of those jobs where, you can't do at home. So in order to get people maybe back who are late, maybe a little bit nervous, whether it's in logistics centers or it's restaurants or hotels, that maybe that's why employers are kind of having to pay a little bit more to say, please, please, please come back to work. We'll pay you a little bit more.
Maybe they're nervous, or maybe they have childcare commitments, obligations that their childcare providers cannot come and take care of those kids.
But I'm just saying to entice them that
You're right.
maybe versus a lot of folks who are working at home, you're not necessarily seeing the wage pressure in those jobs. The other story, and we're going to talk about this, I'm going to talk about it later in the Beyond the Bell, later Beyond the Close. House lawmakers are apparently getting ready to propose some bipartisan legislation that could force Amazon and some other tech giants to shed assets, including some of their private label products. So this is just a reminder of big tech still on everybody's radar.
Yeah, this is a great story in Dow Jones. Each of the bills that has both Republicans and Democrats signed onto it, with more expected to join once they are announced. That's according to a person familiar with the matter cited by Dow Jones.
Yeah, so listen, we're just watching these stories, and whether or not it ultimately ends up in some kind of new legislation, who knows, but it's definitely getting conversation in D.C.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Friday, we are on track for a winning week, 3 in a row, by the way, for the S&P 500 index. We begin with the 10-year. The yield there, 1.46%. Yields holding around the lowest since March as investors continue to assess the outlook for inflation, along with the path of Federal Reserve monetary policy. S&P little change. Choppy Friday. S&P up now by 1 point, up less than 1/10 of 1%. The Dow Jones Industrial Average down 30, a drop of 1/10 of 1%. NASDAQ is up 21, a gain of 1/10 of 1%. NASDAQ 100 index also up 1/10 of 1%. 10-year yield right now 1.46%. Gold down 1.2%, 18.76 the ounce. West Texas Intermediate crude up 0.7 of 1%, 70.77 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet.
All right, you're listening to Bloomberg.
We're having too much fun here.
Yeah, we
It's
are.
Friday.
It's Friday, folks, and it's been a little bit of a crazy week. And that's why we love when we get to hear from some really, really big voices. And today's Bloomberg Big Take features Carlyle Group's and Carlyle Group co-founder David Rubenstein, speaking with Blackstone President and COO John Gray. They talked about a ton of things, Tim, and here's a little clip of it. Gray is sharing his thoughts on investing in real estate, something he knows a lot about. Check it out.
Are you worried about the economy now? The economy's been pretty good, but it probably will head down at some point. The economy is always correct. So if I say I want to invest in real estate, is now a good time, or should I wait a while before the economy corrects?
I think it's still a pretty good time for real estate, and I'd say it for a couple of reasons. One is the warning signs for real estate are twofold: too much leverage, too much capital, and we don't really have that in the real estate system today. The other, too many cranes, too much building. And we're actually below historic levels in terms of new supply. The other thing I'd point out, if you looked at the S&P 500, it's delivered something like 4 times the return of public REITs since the beginning of 20, before COVID. So real estate is lagging coming out of the recovery because obviously people have been concerned about the physical world. I think real estate here, as the economy reopens, people go back into spaces, is going to see a little bit of a bounce. I think the risk is, do interest rates move a lot? That's a bit of a threat. I would say one positive thing about real estate also is inflation, remember, drives up the replacement cost of buildings. And that gives you a little bit of a cushion on existing real estate.
What's the best investment advice you ever received?
What I'd say is, I don't know if it's advice or what I've learned along the way, but definitely the best thing is to be a high conviction investor. That when you dabble and just put a bunch of money here in things you don't know or understand, it tends to work out badly. But when you see something, single family housing, global logistics, the movement of everything online, and you lean into that, that's when you have the best outcomes. And to me, that's really important.
If I said to you, I have $100,000 and I want to invest it in real estate or something else, that's all I have, $100,000. Where should I put my $100,000 today?
Well, I would say in real estate, we love what we're doing in the private REIT space. I think you can invest in a good basket of public REITs as well. More generally, I think the S&P 500. I think the market's trading, even though values have moved a lot, the market's trading in the low 20s, and when you compare that to where the 10-year is at 1.6%, I think you'll do fine over a long period of time. Plus, there's a lot of exposure to fast-growing tech companies in there.
Where should I not invest my money?
You should stay away from buggy whip businesses. You should stay away from landline phone companies and some of the legacy retailers, some legacy media businesses. You want to focus on the future. And I would just say this on real estate in particular, if I had one piece of advice, where geographically, is go where the creative and technology types are, because those are the markets where there'll be the most economic activity. So the West Coast of the United States, Austin, Texas, Cambridge, Shenzhen, London, Amsterdam, Tel Aviv, Bangalore. Tech is driving so much of the growth in this global economy. Those are the most interesting places to invest.
Okay? Do people come up to you at cocktail parties remember what cocktail parties were when people used to get together? They ask you for any investment advice, and you always say, just invest with my firm, or what do you give people advice?
You know, people, it's funny, they often ask me residential home prices, which is not my area of expertise. And, you know, what I tend to tell people is focus on the longer term. Focus on, you know, I think the danger of the world we live in, the sort of Snapchat, TikTok, meme stock thing is dangerous. And what you want to say is this fundamentally a good business? Is it in a good sector? Is this a good piece of real estate where supply is limited, demand is favorable? And if you own something good, hold it for a long period of time. So to me, find those right neighborhoods to invest in, deploy your capital, and then be patient.
All right, and of course, that was Blackstone Group President John Gray with Carlyle co-founder David Rubenstein in the inaugural episode of Bloomberg Wealth with David Rubenstein. That is coming up July 6th at 9 p.m. Wall Street time on Bloomberg Television. And check out Bloomberg's Big Take at Bloomberg.com because that story also today's Bloomberg Big Take. But, you know, it's interesting to hear that. I often talk with people about real estate as an investment, and it's interesting certainly to hear his perspective, someone who knows an awful lot about it.
Yeah, he said the warning signs for real estate bubble really aren't there right now. And I love what he said at the end there just now, Carol, the idea that the Snapchat meme stock thing that we're seeing right now on TikTok play out on social, he calls it dangerous. And he talks about the idea of having quality assets. If you find something good, if you own something good, hold it for a long period of time.
Right. Listen, this gets to the story that we just talked about with Joel, FOMO.
Yes.
And you do see even some big investors getting caught up with it. I think about Ken Mullis, was it a week ago, talking with our team and just talking about, you know, the crazes of meme stocks and Bitcoin, if you will, or it's like something you talk about with somebody at a bar. But, you know, nonetheless, everybody's talking about it. But real estate, when you come down to it, yes, you can build more, but there is fixed supplies, and building more like a big apartment building, you can't just do overnight.
Look, my comments are obviously influenced by where I live in New York City, where supply is certainly limited, and demand, at least outside of Manhattan right now, and it's getting better in Manhattan, is certainly strong. And it's interesting because what we saw in the residential market in Brooklyn, in Queens, in New Jersey, in the suburbs of New York City, incredibly hot demand starting over the last year. And even though mortgage rates have gone up a little bit, interest rates are, you know, the 10 years lower again, it tells me that we're going to continue to see this.
And just think about the swing for a while pre-pandemic. We were talking about Greenwich and, you know, the softening of prices. And now everything has shifted dramatically as those homes have been in demand once again.
Who knows what's going to happen? It's fun to talk about.
I love talking real estate. You're listening to Bloomberg Business Week Chart of the Day coming your way.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You know what time it is.
I know what time it is. Can I go 2 for 101?
You're pumped.
Dave is shaking his head. He already knows it's not going to happen. So that means it's not something that's from the 90s.
You never know that.
You never know.
I'm guessing that it might be a certain song just based on some news flow, but I don't know.
Wow.
I don't know. We're going to see. Now, I'll look at Dave. He's just shaking his head.
he's
Master,
like
you
gonna
know
stuff us.
nothing. You know who knows a lot? Charlie Pellet. So let's get a check on that trading day. Hey, Charlie.
Well, hello there. We've got 28 minutes to go ahead of the closing bell. The Dow trading lower. S&P, NASDAQ. Benchmark bond yields holding around the lowest since March, drop of 0.1%. NASDAQ up 22. The NASDAQ Composite Index higher by 0.2%. Gold is down 1.2%, tumbling $22 the ounce to $18.76. West Texas Intermediate crude up 0.7%, $70.76 a barrel on WTI. NASDAQ 100 index, Russell 2000 index, Dow transports are all moving higher. Stocks trading mix, choppy session, benchmark bond yields around the lowest since March. Investors continue to assess the outlook for inflation along with the path of Federal Reserve monetary policy. UK infections continue to rise, posing a dilemma for Prime Minister Boris Johnson ahead of a crunch decision on Monday as to whether to proceed with the final stage of reopening the economy later this month. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health. He says one of his big concerns now is the spread of COVID variants.
The natural selection principles laid out by Charles Darwin suggest that variants that are more fit will emerge. And particularly in the U.S., we can't look past that because we really have sort of a dual population. We have the unvaccinated and the vaccinated. In many places, the unvaccinated are larger than the vaccinated populations.
Dr. Pekosh again with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we track, the group now trading mixed. Pfizer down 1.4%. Its German partner BioNTech, its ADR is down 0.7%. AstraZeneca's ADR is down 0.2%. Moderna up 0.2%. Johnson & Johnson lower now by 1.5%. Amazon and Apple and other U.S. tech giants would have to sell or exit key businesses under sweeping antitrust legislation being proposed today by House lawmakers. Again, recapping equities trading mix, S&P up 0.5 point. I'm Charlie Pellet. That is the Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg.
But is that right?
It absolutely does. But that's not a CSNY song.
It isn't, right?
No, it's not.
So, Change Partners?
That's
the
it.
song.
Which one is it? CSN or Y?
Ah.
Is it Stills?
It is.
Wow. How'd you do that, Carol?
Because it didn't sound a lot like CSNY. Like it, and I think the other voices tend to be a lot more powering often when you hear the combination.
Well,
that's
yeah,
fair.
the Crosby, Stills, Nash and Young harmonies are sort of like a dead giveaway.
Right.
You don't hear that in the solo work, obviously. So there
Nice
you go.
stuff. See? Tim and I are on fire.
Yeah, well, I got a little cocky after getting one just so right.
We're just going to pass the baton back and back.
Okay, so Monday it'll be my turn.
Yes, exactly. All right, let's get to the chart.
All right, we're talking about changing partners in the world of momentum stocks. Now, you know, in short, we're talking about the shares that are rising at a relatively fast pace. Now, that's tended to be the fastest growing companies as well. So, you know, you look over the last several years, I mean, the momentum stock category has been dominated by, you know, big tech or whoever. things are changing. I mean, you look at what's going on this year. Energy stocks, the best performers among the 11 main industry groups in the S&P 500. You see financial stocks doing relatively well too. And they don't carry the kind of valuations that you see in big tech or those kinds of industries. So what's happened because of that, there's a gauge called the MSCI World Momentum Index, which basically looks at not just the U.S., but all the other developed markets around the world too. So there are 23 different markets represented. Twice a year it's overhauled, in May and November. So a couple of weeks ago was the May overhaul. And what happened then is that you saw, an index that was valued at 30 times earnings, basically, go down to 18 in a day.
Because they're cheaper stocks, right?
Because the composition of the index changed so much, reflecting the movement toward, cheaper companies in terms of market leadership. So, the energy shares, the financial shares, and all the rest. So, and it's something that Michael Venuto, who's the chief investment officer at Toroso Investments, pointed out on Twitter yesterday. And it's like, that's interesting, even though it's happened a couple of weeks ago. I mean, it's a very extreme move, and it just goes to show you how the nature of momentum is changing, given what's going on in terms of the industry groups and how they're performing. So if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Why was this? This is a twice yearly overhaul,
right?
So why is this one so different than others?
Because the index itself is based on 6-month and 12-month price changes. In other words, that's how they determine momentum. And it's really been in the last 6 months or so that we've seen this kind of wholesale shift away from growth and toward value, with energy stocks and financial stocks and others at the forefront. So it's really being reflected now because of the nature of the index and how it's calculated and how it's maintained. But at the same time, it's indicative of a larger transition that's been going on in the markets.
All right, stock of the day.
Live Ramp. Ticker is RAMP, R-A-M-P. It's marketing technology company, and suffice to say, it's not doing so well today. Somebody sold 2 million shares in a single block. You're talking almost a 3% stake, and their president, Annika Gupta, is leaving effective July 1st, and she's been with the company for some time. It's not the sort of thing you want to see. Yes, it will.
It's not a great year for it either. It's down about 43%.
Yeah, which may explain why she's leaving. Who knows? But in any case, Live Ramp shares are at their lowest price in a year and headed for their biggest loss since November. They're down about 13.5% at the moment.
You can check out Dave's Stock of the Day. This is after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter at The One Dave.
I thought he was going to play some Marley because Ron Burkle, right? He bought into his music.
I didn't even know that.
Yeah.
See, you're looking.
All right. Let's get to, have a good weekend, Dave. Let's get to World of National with Nancy Lyons. Hey, Nance.
Hey, Carol. Attorney General Merrick Garland says he is doubling the number of attorneys in the Justice Department's Civil Rights Division in order to scrutinize the restrictive voting rights laws being put into place in at least 14 states.
The right to vote is the cornerstone of our democracy, the right from which all other rights ultimately flow.
Garland also says Congress needs to pass new voting rights legislation. The Justice Department's internal watchdog has launched an investigation after revelations former President Donald Trump's administration secretly seized phone data from at least 2 House Democrats as part of an aggressive leaks probe. Democrats called the disclosures a shocking abuse of power. Well, a subsidy for low-income families with children takes effect July 1st, and the Biden administration is launching a publicity drive to reach those who qualify.
Vice President Kamala Harris went to a child care center here in Washington to describe the plan.
We want to make sure that every family with children who qualifies for this tax credit receives it, because that will help us lift half of those living in poverty out of poverty. So the checks will start dropping in July.
The benefit was enacted as part of the pandemic spending bill and will continue for 2 years, at which time Congress will be asked to extend it. In Washington, Irv Chapman, Bloomberg Radio.
Harris will travel to South Carolina next week to promote vaccinations. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. It's Friday. This is the Interactive Broker Studio. Carol Massar, Tim Stanovic here. This story by Peter Coy, Bloomberg Business Week. It's got a great headline. Fewer young men are in the labor force, more young men living at home.
Yeah, for 25 to 34-year-olds, the two trends add up to what's called failure to launch. Are young men living at home because they're not working? Peter Coy asks, or are they not working because they're living at home? It's hard to say, but either way, the trends are clear. More American males in that age group are living at a parent's home, and fewer are participating in the labor force.
All right, here's the charts. I don't know if you can see it. You can see it if you're on YouTube, kind of. I'm sorry, but you're going to have to go to Bloomberg.com or the Bloomberg terminal and or pick up the magazine, because then you can see the charts. No way to tell, as you said, the data set is trying to make sense of it. The Conference Board, a business-supported research organization, has created a chart breaking down the living at home contingent by educational attainment. For those with a bachelor's degree or more, the increase has been modest, from around 10% in the mid-90s to around 13% this past April. For those with less than a bachelor's degree, the increase has been steeper, from around 15% in the mid-1990s to nearly 25% this April, Tim.
Well, the Conference Board states, quote, a growing percentage of young men without a bachelor's degree are living at home. The trend is contributing to a lower labor force participation. That's why it's so important to read closely into the employment numbers that we get each month, because it's not just those headline figures, right?
Right.
It's about labor force participation, which gives a good metric to, well, how many people are participating in the labor force.
Check this out in Peter's story. Improvements in video game technology help account for young men's detachment from the labor force, according to a 2017 paper by economists from Princeton, the University of Chicago, and the University of Rochester. It found that an increase in the playing of video games by men 21 to 30 accounted for somewhere between 38% and 79% of the differential in the decline in their time spent on paid work versus the smaller decline of work by older men.
I don't get it, though. You got to work.
I guess not if mom and dad are paying the bills.
Yeah.
They got a basement.
I guess.
Extra room upstairs.
No judgment.
No judgment. Truly, no judgment. Because sometimes it's just hard. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Hunnam. 13 minutes ago ahead of the closing bell on this Friday, June 11th, we've got the Dow Jones Industrial Average remaining lower. S&P, NASDAQ both advancing right now. Choppy trading, a mixed day. Benchmark bond yields holding around the lowest since March, 1.45% right now on the 10-year. Investors continue to assess the outlook for inflation and the path of Federal Reserve monetary policy. Next week, we do have a Fed meeting. S&P up now by 1 point, little change. The Dow down 29, also little change, down less than 0.1%. NASDAQ up 25, up 0.2%. NASDAQ 100 index up 0.1%. Russell 2000 up 0.8. Dow Transports up by 0.9%. So again, recapping, equities are trading mixed. Gold right now down 1.1%, 1876 the ounce. West Texas Intermediate crude up 0.7, 70.79 a barrel. I'm Charlie Hunnam. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
What 2 weeks it has been this past week.
I don't even know what to compare it to. It's like every week feels like it's kind of wild. But hey, that's why we love what we do.
And I had a day and a half off, and it still feels like 2 weeks. Let's get to it. Time for the drive to the close. And back with us is David Dietz. He's managing principal, senior portfolio strategist over at PPAC Private Wealth Management, $9.4 billion in assets under management. David with us once again on the phone from Summit, New Jersey. David, how do you make sense of a week like this past week?
Well, I mean, the key metric this week has been this higher than expected inflation number, the highest in 13 years. Yet you would think that we'd see a big bond tantrum, yields racing north, but we're not seeing that at all. We're down by about 25, 30 basis points since March. And I think Wall Street is scratching their heads trying to make sense of this higher than expected inflation, yet no reaction to bond market.
Well, wait a minute. We're all smart here. And we know we went through a pandemic, and we know that everything fell off a cliff. And we're still bouncing back. These are still post-pandemic coming back numbers. So we're not, we get it, don't we?
Well, certainly, that's one of the reasons that people are giving these high inflation numbers a pass. I mean, we saw 12% markup in terms of used car prices, and people are saying, well, we're not going to see 12% each year. Ditto when it comes to airfares are not going to keep going up at this rate and some other things. Having said that, even when you strip out the food and energy, you got this core CPI is at the hottest since the 1990s. This is the central question, Carol. Is this transitory because this is just a bump up when you compare it versus very depressed conditions a year ago during the pandemic, or is this something a little bit more permanent that the bond market's going to factor in and ultimately the Fed's going to have to take action?
Well, I think if, we talked a little bit about this yesterday when we got these figures, the headline numbers were certainly hot, but if you took a peek under the hood and you saw actually, what accounted for those significant changes, a lot of it had to do with things that were transitory, especially when you take into account the base effect of 1 year ago and what was happening 1 year ago. But even things that were month over month higher, like car rental prices, for example. We know those are things that are going to come back down as this pent-up demand kind of makes its way throughout the summer and the early fall, right? And isn't that what the bond market is telling us?
Well, I think that's what it's telling us. The problem is, of course, is that, we haven't gotten now back to full employment. We know we're making progress. We're seeing each week better or fewer claims for unemployment insurance. We know we're going to get back there as the pandemic wanes, more people have vaccines and so forth. So we think ultimately there's going to be some upward pressure on wages and so forth. And even some of the sticky items in the inflation numbers seem to be going up too. And we know that once wages and some of those sticky items go up, they're not going to come back down. So that's what we're bracing for.
But again, with wages, we're seeing a lot of those increases in hotel workers, the hospitality industry, restaurants. There are things that those kinds of companies and industries are doing to get workers back who may be a little bit nervous about doing so. I mean, to Tim's point, David, 52% of the month-over-month increases came from 6 components: used cars, rental cars, vehicle insurance. I see a trend: lodging, airfares, and food away from home.
Yeah, absolutely. So, every time there's an inflation cycle, people always point to a few outliers and say, well, that's the problem. But here's what we're up against, Carol, is that, your 10-year Treasury now is at 1.45, yet the implied inflation on TIPS, Treasury Inflation Protection Securities, for the next 10 years is 2.5. So real yields are still negative. We know this economy is getting back on its feet. We've got more stimulus perhaps on its way from an infrastructure bill. We've got the Federal Reserve putting money into the system, and so eventually interest rates are going to have to go up.
But isn't it like a pendulum, right? We just swung so dramatically one way when everything fell off a cliff. Now we're swinging kind of dramatically back. It's going to settle at some point, but we really won't know, David, right, until we are kind of out of this pandemic, what really the economic numbers really are and what the real inflation is.
For every buyer, there's a seller. But, one way I'm looking at it here is that, we started the year, 10-year Treasuries were under 1%. They got up to 1.75. Now they're 1.45. You can still make a case that we're trending up here. In 2019, which we'll get back to conditions like that, I think 10-year Treasuries are as high as 2.9. So the question is, what do you do now? Do you expect interest rates to stay low, or do you brace for higher rates, higher economic growth going ahead?
Okay, how do you brace for it? What do you pick?
So we think economically sensitive stocks are the ones that you want to tilt your portfolio to. These would be financial services. They love higher interest rates. They can charge more for their mortgages, get more on their insurance portfolios. We think materials, energy, ultimately, for example, this upcoming Thanksgiving, people are going to be hitting the road. People are going to be flying. There's going to be tremendous demand. No one wants to drill anymore. So we think things like that will be going up, and that's where you should be tilting. While things like pizza delivery and so forth, we're not going to see that big increase in demand going forward.
All right, so what would you be buying here?
We love Intel as a way to play both technology and a cyclical upturn. We know there's a chip shortage. We know we have to recreate manufacturing here on our shores. Intel's got new management with the engineer from Intel returning. They're trading at just 12 times earnings. They're still at a cheaper price than they were in 1999. But when you think of chips, autonomous driving, artificial intelligence, Internet of Things, you got to think of Intel. We think that's a great way to, have a secular trend, but also take advantage of the cyclical upturn.
Hey, what about AT&T? I know that's on your list of companies that you're interested in. Why, especially as they go through this sort of recalibration back to a telecom company away from a media company?
Yeah, so they got the new man in there, John Stankey. I think he's doing the right thing. He is refocusing the company on telecommunications, getting outside of the content. I think that their announcement just recently to shed their entertainment Warner Media assets, put into a separate company, merge it with Discovery, will allow them to better focus on the wireless, the 5G opportunity, let someone else deal with the entertainment assets. Of course, they still have 71% of that. But the opportunity here is they're paying a 7% dividend. They have to rationalize that. It's going to come back down to 4%. So you have this stampede of people out who wanted the big dividend. I think people are going to come in and say, hey, it makes more sense. What the company doesn't pay out to me as a dividend, they keep in the company. It benefits my shares. It allows them to deleverage. So the stock is down now. I see it drifting up.
Hey, just got about 50 seconds left here. Exxon, I'm assuming dividend play is part of the reason you like Exxon, because it's also been on quite a run, up more than 50% this year. But the dynamics longer term, most investors would argue it's definitely changing.
So I think the argument for any energy company here is that the rush to get green is happening faster than consumers can actually wean themselves off from their automobiles, wean themselves off from gas to heat their homes and so forth. And I think ultimately that's going to push prices up dramatically. Exxon is the no-brainer. It's the largest publicly traded integrated energy company. I think people are also on pause here because they've looked at 3 board seats which have gone to so-called green directors. But guess what? Those green directors want to make money too. And of course, while you're waiting for things, you got that big 6% dividend, Carol.
Story in the magazine about engine number 1 that you can talk about.
Could, right?
What?
The little engine that could,
The little engine that definitely did. David Dietz, thank you so much. Have a good weekend. Managing Principal, Senior Portfolio Strategist at PPAC Private Wealth Management, $9.4 billion in assets under management, on the phone from Summit. I am watching, kind of glued to the Bloomberg terminal, as those major equity averages are going up here in the last few minutes of trading. We could see the S&P work its way back up towards its highs of the day. Still little change, but nonetheless moving up towards those highs. All right, coming up next, we're going to be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, counting you down to the closing bell on this Friday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Tate gone, Shanali in, here to help take us beyond the bell. Our global simulcast team, Carol Masser, Tim Stenevik, back from Margaritaville, bringing together our Bloomberg television, radio, and YouTube audiences to parse all the crucial moments here of the day and of the week. And Carol, we've been talking about a lot about this on this day here.
What?
The S&P not doing a whole lot, but it's going to be good enough for a record high.
Yeah, exactly. I was just going to go to that because I've been looking at the trading range for the week overall. At its low, down about 0.5%. At its high, up about 0.5%. For the week overall, this is very different from the trade that we've seen over the past couple of weeks. And yes, I am back from Margaritaville, and I did find my lost shaker of salt.
She got it.
Had to do it.
Hey, even though it's traded within a narrow range this week, it does look like the S&P 500 is going to eke out a gain for the week, the third one in a row. Looking to finish higher by just about 0.4%. The NASDAQ, though, looking to finish higher by about 1.8% on the week. The Dow, though, really bringing up the rear, down just about 0.8% on the week, guys.
On the week. I mean, while, Carol, you were there doing your parrot hat dances or whatever it else is that you do at Margaritaville, I have no idea. There's a cultural void here for me when it comes to Margaritaville. I'm looking at volumes. Shanali, down by 18% on the day when it looks to the S&P 500. Everyone's by the beach, even though it's great weather.
Yeah, that's for sure. But we're seeing the 10-year yield. That is a big story. It's at its lowest level since March, under 1.5%, even with gaining some a little bit today. It's not enough to hold steam.
Yeah, 42.46 and change right now on the S&P 500. That's up about 7 points here. That looks like it's going to finish the day up about 0.2%. That's going to be good enough for a record high. NASDAQ Composite 14,065, up about 48 points, up 0.3%. The Dow Jones Industrial Average up fractionally on the day. We should point out that is the big laggard on the week, down 0.8% on a weekly basis. And we should point out the Russell 2000 is the outperformer once again on the day as well on the week. In fact, the outperformance on the week for the Russell 2000 versus the S&P, that's the widest differential that we've seen since March 2000, 335 and change on your screen, up 1% here on the day.
Guys, I want a Bitcoin for every time I hear Goldilocks, because I feel like we hear it with the inflation data, with the sentiment data, and we definitely see that play out in the equity markets. And I think at this point, we're going to have to wait to see what the Fed does next week, whether or not they change kind of, Caroline, that investor sentiment that we're feeling right now.
A Bitcoin, that's quite a lot of money. I mean, it's halved basically, but I don't want to give 36,000 to anyone right now. I'm looking at what is on the higher side. When you look at equities, let's dig in from a sector perspective. For our radio audience, you can't see this beautiful chart that I got here. Consumer durables doing pretty well. We've got financials for once getting a bit of a bid. They've been in the doldrums throughout the week as we saw yields crush lower. But today, yields tick up all of 2 basis points, and suddenly we get the financials getting a little bit of a turn on. We see semis doing relatively well, so technology getting a little bit as we head towards the week. On the downside, let's go in here, Matt, down by pharma bio. This is why you have got the likes of Vertex, some of the biotechnology companies really hurting. Real estate, of course, bond proxy, as our Tate would call them, Carol. That's on the downside too.
She would indeed. Let's get to some of the gainers, because, man, the pandemic plays are back in force today. Peloton up about 6.6% here. And this is a top gainer in the NASDAQ 100. Only news I could find is that they're now going to be in Australia. Stock's still down about 26% year to date, but it has rallied more than about 35% 5% since that May 5th low. So watching that one. Another pandemic play, Zoom. We have seen this stock moving up. They reported earnings on June 1st. Earnings and sales topping analyst estimates. RBC Capital Markets assuming coverage with an outperform, setting a price target of $450. That stock up about 5.7%. Got to mention some of the retail names because they were among the biggest movers and gainers in the S&P 500. VF Corp, Tapestry, The Gap. The only story that I saw that might play this is the House lawmaker is getting ready to propose bipartisan legislation. Could require something like an Amazon to shed their private label products. So maybe anybody who plays into the retail sector could be a gainer as a result, Tim.
Yeah, Amazon's loss could be their potential gain. You heard Caroline mention some of the pharmaceutical companies. I'm keeping an eye on those as well. Biogen, down around 4.3% today. This was a controversial decision from the FDA. We covered it all week. We did see that at least 3 members of an FDA advisory panel have resigned in protest of the approval of that Alzheimer's drug. Also keeping an eye on Chewy. Shares lower by about 5.8% today. The company reported earnings after the bell today, yesterday. Analysts mixed on that report. Snowflake finished the day down by about 3.3%. They hosted an investor event where the long-term targets for operating margins, those disappointed analysts. And finally, Vertex Pharmaceuticals, Caroline, you mentioned this, finishing the day down around 11%. The company ended development of a therapy for liver disease. Caroline.
Tim, we saw biotech on the downside. What else was on the downside from a cross-asset perspective? I dig into the foreign currency market and, well, everything was basically lower against the US dollar today. The dollar index for our radio, YouTube, and TV viewers up 0.5% basically on the day, and it's up on the week as well. Even as we see inflation creep higher, even though many are feeling that the Fed isn't going anywhere, we are seeing the dollar still catch a little bit of a bid. The key question is whether the Federal Reserve will tamp down on that, and soon as they're meeting next week. Canadian dollar was down on 0.5%. The pound having a poor performance. Why? We're worried about the reopening. It was promised for June the 21st. That looks to be being delayed as we see the Delta variant rear its ugly head in the United Kingdom. As we see oil actually on the higher side, even though we've got, that might be a story, of course, of dollar, well, against dollar strength higher, but even WTI crude manages to catch up 0.7%. The reason oil gets a bid, well, we're looking at demand, pushing that a little bit higher. Nat gas is up, and I leave you on sovereign bonds. Basically, worldwide, Shanali, we have got a bid for sovereign debt at the moment. Yields coming down in Greece, in Switzerland, they're off by 2 basis points, even across in Asia as well. So money moving into your sovereign debt.
Yeah, that's absolutely right. We're seeing those yields lower across the board, but let's talk about that U.S. yield a little bit more because we have the FOMC next week, right? And what are investors expecting to hear? A whole lot of nothing. The yields in the U.S. are set for their biggest weekly drop in a year as shorts exit, and let's see what that ends up meaning for the stock market at the end of the day.
Well, I think that's a good point. Brings us to our first chat topic because we are watching what happened with yields this week, the biggest weekly drop in about a year, and it was interesting to get that inflation print, and you do wonder how the Fed guys will ultimately look at that kind of lack of reaction, letting yields slip to some lows that we haven't seen in a long time, and whether or not then they feel comfortable about leaving policy as is, at least for the time being, Romy.
I think one interesting way you can interpret this, though, too, is that this does sort of ratify the general idea that the market did sort of buy into the communication out of the Fed. And you would think that Powell has to be somewhat pleased with that. Of course, what he's probably not pleased with is the fact that you certainly have a 2-year yield camped out below 20 basis points, not going anywhere. And you have a lot of stuff going on in the belly of the curve with the 5-year that's really going to complicate things for the Treasury. And if that complicates things for the Treasury guys, that's going to complicate things eventually for the Fed.
When I think low yields, especially on the 10-year, I continue to think about mortgages in the housing market. And I know I talk about this a lot, and Jonathan Gray spoke about this from Blackstone. He doesn't think there's a bubble, but if we do continue to see low mortgage rates when it comes to real estate, we're going to continue to see those real estate prices move higher because the lower mortgage somebody has, the more they can afford to pay each month. And that, of course, drives demand up and causes people to pay more expensive prices for homes.
And that sort of math happens to work on the other side of the Atlantic as well. You're seeing the same sort of things that pushes and pulls at play when you look at the UK real estate market, mortgages being particularly low. And I think what was really notable for me is this was a story of dovishness coming not only from the Federal Reserve as we continue to await that next week, but the ECB this week. And again, saying, yeah, I see you inflation, but I call it transitory. I'm going to still have my pedal to the metal when it comes to the overall stimulus. And I'm also going to see yields drop, Shanali, continuing to drop over in Europe too.
Yeah, that yields dropping story is a big one. And you were talking about Jonathan Gray, but there's also Jamie Dimon, who said that if the rates were going up, then you would see that issue with the mortgages. But, you know, that looks really good for the banks, for their ability to not just sell mortgage loans, but also credit cards.
All right. Did we talk about consumer sentiment? Because, man, we did get some economic news. Again, Goldilocks, everybody gets a Bitcoin. The sentiment rose, but then we saw inflation, sentiment or outlook kind of moderate. So this is why I think the markets are trying to make sense of the, back and forth here, guys.
Let's look. Also, Shonali was pointing out to us a little bit earlier. Did you know? Well, she's going to be stood outside Goldman Sachs from about 5 a.m. on Monday, hey? Because, Shonali, what are you saying? That most of the bankers are suddenly being called back to work?
Thousands have been back. Thousands are coming back. Everyone's getting prepared. It's going to be a rainy day. I'll have my
so this
umbrella.
means I'm not going to be able to get an Uber on Monday? Is that what you're telling me?
It does. If you're headed downtown.
I have to get a yellow taxi.
Oh, yellow
it's
taxi,
okay.
Great.
Subway's been fine. I've been riding the subway. It has been fine. We're vaccinated.
I'm
do it. Yeah, it's been great.
Hey,
I just want to say one.
In that suit.
Yeah, that's right.
No,
custom tailored.
Go ahead, Romaine.
Yeah. I got nothing else smart to say here.
I got an umbrella for you. We'll keep you dry.
Friday.
I'm just going to say we're going to visit Goldman Sachs, see what's happening with Shonali, and then we're going to take Caroline to Margaritaville.
Yes, please.
Okay.
Do your shark dances, do everything.
I need you
It's gonna be a work
you
trip.
to invite us down to Margaritaville. I thought this was a global simulcast team here.
Yeah.
Just you two get the fun assignments.
All right, sorry. All right, to be continued.
She's giving us Bitcoin, though.
What are you doing? What are you doing after this? You probably got something fun planned for radio,
That's
right?
going to do it for our cross-platform coverage live on Bloomberg Radio, Bloomberg TV, and YouTube. Have a good weekend, everyone. Same time, same place on Monday.
They're off to do their wine tasting thing that they get to do on radio.
Something, probably going to barbecue or something.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I think our TV guys are a little jealous of what we get to do.
Yeah, well, you found the lost shaker of salt.
I did. It was tough, but somebody had to do it.
I think that's a good way to end the week, Carol.
It's a great cover story of Bloomberg Business Week magazine. It's the domestic cover. If you really want to understand how a song written in 5 minutes has turned into a massive enterprise, this is a story you've got to check out.
I get it, though. After reading that cover story in Bloomberg Business Week, I get it. Selling a lifestyle, and it's a lifestyle that, look, it's about escapism, and I think it's totally okay, and it's a perfect time to be
Chilling
thinking about
out.
that stuff as we get to the other side of this pandemic, at least here in the United States.
And I'm thinking after that Fed meeting, maybe we'll need a margarita, or maybe we'll be like, you know what? Everybody's chill.
All right, drink a sip every time he says transitory.
There you go. You too might get a Bitcoin. I don't know.
Bitcoin's better than a hangover.
That is true. Have a good weekend.
Thank you. You too.
Good stuff, good stuff. My co-host, Tim Stenovic. Catch him on Quick Take, and of course, catch him here always 2 to 5 p.m. on Bloomberg Radio. Let's get to world and national news. For that, it's over to Nancy Lyons. She's in our 99.1 newsroom in the nation's capital. Hey, Nance.
Hey, Carol. G7 leaders are tackling several tough issues as they meet on the Cornish coast of southern England. British Prime Minister Boris Johnson is the host. He says they need to focus on the global economic recovery from the pandemic.
I think what's gone wrong with this pandemic, or what risks being a lasting scar, is that I think that inequalities may be entrenched. And we need to make sure that as we recover, we level up across our societies and we build back better.
Johnson says it's important they heed the lessons they learned during the pandemic. The Justice Department's internal watchdog will investigate a Trump-era effort to secretly subpoena data of at least 2 House Democrats who served on a panel investigating the former president. Senate Democrats say they want former Attorneys General Bill Barr and Jeff Sessions to testify under oath about the subpoenas that were issued in an attempt to track down leaks to journalists regarding potential links between Trump's circle and Russia. The Pulitzer Board is honoring the teenager who documented the death of George Floyd, setting off a global movement over racial injustice.
The Pulitzer Prize Board is pleased to award a special citation to Darnella Frazier for courageously recording the murder of George Floyd, a video that spurred protests against police brutality around the world, highlighting the crucial role of citizens in journalists' quests for truth and justice.
Darnella Frazier was 17 when she recorded the video of Floyd's death in May of 2020. He died, of course, at the hands of Minneapolis police officers. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thanks, Nance. Well, as you know, we've talked with Joel Weber and Austin Carr about his cover story, the domestic cover of Bloomberg Business Week. It's about Margaritaville coming to New York City, and our Bloomberg Business Week weekend show features our interview with singer and entrepreneur Jimmy Buffett on bringing his $370 million Margaritaville resort specifically to the Big Apple. In this excerpt, Buffett talks about his relationship, though, with another Buffett, the Oracle of Omaha.
So one last question, guys. I have to say, in the lead up to this, Tim and I have been talking around the newsroom, like, we're going to interview Buffett. And they're like, Warren? And we're like, no, Jimmy Buffett, the other Buffett. You guys are actually friends, Jimmy. And we're curious, do you talk business with him? Do you talk investments with him? Do you drink margaritas with him? Like, I'm just curious about that relationship.
If you were a distant maybe cousin of Warren Buffett, you'd call him too. and we've been friends for a long time. We were introduced by his sister Doris to my mom when they went on a genealogical kind of trip. And that was the first time that she said, you ought to meet Warren, you ought to buy Berkshire. And that was like in 1972. And I did both.
Wow. Have you bought Bitcoin?
And yes, yeah. I know what Warren thinks about it, but it is, a little dabble in there doesn't do anybody harm. I think in the entertainment side of it is pretty interesting. I'm looking at how you could tickets to me is an interesting thing of how you could control. Right. Maybe scalping it in the long run. I don't see anybody that's done anything about it yet that has actually worked. But this could be a possibility. That's what I'm kind of looking at. Yeah.
Well, I got to say, when it's 5 o'clock,
I'm not going to buy a $70 million painting. Don't worry. But I'm looking at tickets.
All right, that, of course, was singer and entrepreneur Jimmy Buffett. You can hear more of that interview on our Bloomberg Radio podcast and our radio show. And also just check out Bloomberg.com. All right, let's...
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
For the S&P 500 index ending the week, heading into the weekend at 42.47, up today by 0.2%, bringing the S&P's year-to-date gain now to 13.1%. The Dow up today by 13, late day rally there, up less than 0.1%. A little changed on the Dow. Nasdaq surged 49 points, up 0.4%. Nasdaq 100 index up by 0.3%. Equities eked out a gain in choppy trading as investors continue to assess the outlook for inflation along the path of Federal Reserve monetary policy. Next week, we do have a Fed meeting. 10-year Treasury yields holding it around the lowest since March. 10-year yield now 1.45%. Gold down 1.2%, 18.75 the ounce. West Texas Intermediate crude up 0.8%, 70.85 a barrel. I'm Charlie Howard. It's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, SPACs, you know, special purpose acquisition companies or blank check companies, they have 2 years to do a deal or they have to give the money back to investors. And right now, there's a lot of money out there that's got to find a deal. Let's get some thoughts, though, on the SPAC space. Patrick Alley is CEO and Chief Investment Officer of the investment management firm River North Capital Management. They specialize in opportunistic strategies in niche markets. They have $4.95 billion in assets under management. Patrick joining us on the phone in Chicago. Patrick, welcome to Bloomberg. Nice to have you here.
Thanks, Carol. Thanks for having me.
Well, so we're going to talk about SPACs in a moment, but you guys do seem to focus at your firm, on making distinctions between efficient and inefficient markets and market strategies. How do you define or distinguish kind of the difference between the two?
Yeah, great question. Our firm historically is focused on trading closed-end funds, which we tend to be inefficient in the secondary market. So closed-end funds trade on the New York Stock Exchange typically. Oftentimes they can trade at discounts and premiums to their net asset value or the underlying value of the closed-end fund itself. And so, that in itself tends to be an inefficiency that we try to take advantage of. Oftentimes, fear and greed is a driver of that inefficiency as there's more fear in the market, like we saw in March of 2020. You see record discounts, and then as you can, at certain points in time in the market, you can see premiums out there. And so, to us, that's a clear distinction of an inefficiency versus, from our perspective, a lot of equities out there. What's the intrinsic value of an equity? Really, nobody knows. It's everybody's guess. But a closed-end fund, you actually know what it's worth versus where it's trading, and that's really how we think about SPACs as well, which we can get into.
Well, let's talk about that specifically. SPACs, efficient or inefficient, or it depends?
Yeah. We think they're relatively inefficient. I mean, if you think about a SPAC, I think there's a lot of misconceptions out there, right? To us, first and foremost, you have to define what a SPAC is. And a SPAC, that is a portfolio of cash sitting in a trust, and the sponsor has a 2-year period of time to make an acquisition, which you alluded to at the beginning. But I think the misconception is that a lot of people look at once the acquisition is done and that cash merges into a private company and that private company is now public. I think a lot of people think of that private company as still a SPAC, and we just don't think that's the case. So if you think about just the SPAC itself in the portfolio of cash, you can trade at a discount or a premium to that trust value. And we think there's a lot of inefficiencies there. And frankly, today, it's a much more attractive marketplace than it was in, for example, February, when everybody thought, SPACs were the greatest thing. They're actually trading at premiums to cash. But we think it's a much better investment environment today because they're trading at discounts to that cash that's sitting in trust.
Okay, because it is definitely a very different environment from where they were. I mean, how do you then, as an investor, because I'm thinking about, we're often talking about, there are a couple of stories today, just today, billionaire Ron Burkle, he's got a SPAC, it's combining with a Berlin-based online retailer of bicycles, tennis equipment, and camping gear. We're talking about Cygnus Sports. Bill Ackman this week, a SPAC that will be actually 3 SPACs and a Spark 2, which is a special purpose acquisition rights company. I mean, we're kind of learning as we go. So how do investors need to look at each and every SPAC, if you will?
Yeah, no, and that's the most important part. It's the delineation of the SPAC when the cash is still sitting in trust prior to the merger that has occurred, right? And once that merger has occurred, it's not a SPAC anymore, and it becomes a very different risk profile post what's known as, it's called the de-SPACing process, right? When that private company merges into the trust. And now the investors would have the risk of actually that company. But prior to that de-SPACing, then the investors really only have the risk of the cash sitting in the trust. And investors have the option to tender their shares and get the cash back in the trust if they don't like the acquisition or if it's not trading well in the secondary market. So that's, from our standpoint as opportunistic investors, we're getting a free look on how the market appreciates or doesn't appreciate the potential acquisition that's been announced. And if it's trading at a premium to that cash value, we can sell it. And if it doesn't, then we can trade it. We can tender our shares and get the cash back in the trust. But it's a very important distinction because it's a really different risk. Once the de-SPACing occurs and the merger occurs, investors have the risk of a private company that now is public.
You see it play out in the marketplace.
From our perspective, we typically don't have it.
You see it play out in the marketplace. Like, it does feel like when there are certain SPACs announced, depending on who's behind it, it can kind of run up. I mean, I'm looking at the IPOX SPAC index, which is down, I don't know, about 22% from the mid-February high. So we've definitely seen a pullback. And that's why I guess you say when you look at whether it's the valuations or what has happened, maybe there's some more opportunity. But it is interesting to watch the life cycle. And there's often a lot of enthusiasm at the beginning based on who's doing it. But later on, depending on where the money, what companies bought, it's a very, very different story. Just got about 25 seconds left.
Yeah, no, and I'm glad you brought up that index because, there are companies in there that have already de-SPACed and that are no longer SPACs. But that performance will ride with the market. And as you compare that to maybe other growth innovative companies that have gone up and come down. I mean, there's certain indexes or ETFs that are out there that have depreciated over 40% since February. And there's a high correlation there. But you have to have the distinction between the SPACs and actually the post-de-SPACing.
Well, this was a great conversation, and I really feel like we learned a lot because you've got to understand the terminology in the life cycle because it's very different from the beginning to end. Patrick, thanks. Patrick Galley, CEO, CIO of River North Capital Management, on the phone from Chicago. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So we've been getting ourselves lost in a new documentary, new film that actually is having its world premiere at the Tribeca Festival, which has gotten underway in 2021. We're talking about The Conductor, and we are going to talk with the director behind it and the subject of the film. We'll get to that in just a moment. First up, though, let's get back to your top business stories. How that trading week wrapped up. Here is Charlie Pellet.
I've got an after-the-bell headline. Got to begin here. New York State's outlook raised to stable from negative by S&P. Developing story, that headline right now on Bloomberg Professional Service. Worth repeating, New York State's outlook raised to stable from negative by S&P. Equities eked out a gain today, higher by 8 points. Right to the numbers here because it is a record on the S&P, 42.47, up today by 0.2%, bringing its year-to-date gain. YTD on the S&P, 13.1%. Nasdaq up 40 points today, up 49 points, I should say, up 0.4%. The Dow Jones Industrial Average up 13 points, higher by 0.1%. And interesting to look at the gains for Nasdaq in recent sessions. Nasdaq's year-to-date gain now 9.2%. And again, to put that in context, S&P is up by 13.1%. An update for the Nasdaq 100 index up 0.3%. Russell 2000 outperforming up 1.1%. Dow Transport's up by 1%. Choppy session, though, as investors continue to assess the outlook for inflation, along with the path of Federal Reserve monetary policy. 10-year Treasury yields holding at around the lowest since March. 10-year yield now 1.45%. So it was an update today for the Dow, the S&P, and the Nasdaq Composite Index. We had the S&P, as I mentioned, advancing today by 8 points, again closing at a record. Well, as for the market backdrop this week, David Dietz is Senior Portfolio Strategist at PPAC Private Wealth Management. He was our guest right here on Bloomberg Business Week.
The key metric this week has been this higher than expected inflation number, the highest in 13 years. Yet you would think that we'd see a big bond tantrum, yields racing north, but we're not seeing that at all. We're down by about 25, 30 basis points since March.
Elon Musk has billed Tesla's newest vehicle, the Model S Plaid, as a halo product that proves the superiority of electric cars at an event marking the start of deliveries to customers. That sedan, by the way, can reach 60 miles an hour in less than 2 seconds. Tesla shares little change lower today, down by less than 0.1%. Gold up down 1.2%, 1876 the ounce. Crude up 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
What's going on Matt Miller's buying list? I can just get.
It's unbelievable. Really.
All right, Charlie, thank you so much. That's Charlie Pellet, and this is Bloomberg.
I went back to my violin teacher at Juilliard, and I was really excited. I said, you know, I saw this amazing conductor, and I'm going to be the conductor when I grow up. And she said, oh, well, you know, your conductors are older than you are. I thought, well, that's okay. I'll get older. And then she said, and girls can't do that. It was said with such authority that it really discouraged me.
Well, that is the voice of the internationally renowned conductor, Marin Alsop. She is the subject of a new documentary, new film, making its world premiere at the Tribeca Festival that is underway, making its way back after the virus and COVID shutdown. The documentary is called The Conductor. It will take you into the heart of classical music and an anomaly in that world, a woman conductor. It is directed by Bernadette Wegenstein, who joins us right now on the phone in Baltimore. Also from Baltimore, the subject of the film, Marin Alsop. She's the first woman to serve as the head of a major orchestra in the U.S., South America, Austria, and Britain. She is the first and only conductor to receive a MacArthur Fellowship. So delighted, Marin and Bernadette, to have you here with us. How did this come together? And Marin, why don't you kick it off for us?
Sure. Well, thank you so much for having us. We're really, really excited about this premiere coming up at Tribeca. And the film actually started as a desire on my part to preserve the stories of women I had met a woman in her 80s, a very knowledgeable conductor whom I'd never heard of. And I couldn't believe that I didn't know her name. And if I didn't know her name, the world certainly didn't know her name. So it started as, and my thought was to preserve her story. And I was introduced to Bernadette, and we decided to start there. And then it really morphed when Berna got a hold of it into more of a story about my journey. Is that right, Berna?
Yes, that's right. And hi, Carol.
Hi.
Nice to be on the show. And hi, Marin.
Hi.
Yes, exactly. So we were connected through the provost, actually, Sunil Kunar at Johns Hopkins University, where we both work in different capacities. Marin brought this story to my attention and the forgotten history of women conductors. And I started, developing this project, and we actually developed Sylvia Kaduf, the woman she mentioned earlier from Switzerland, and then of course some of Marin's students. But I more and more, was so, taken by Marin's life story, and I decided, this needs to be a film about her. And we've seen so many films about men that aren't even so interesting, and they can carry a 90-minute film about themselves.
Well,
so, I really said, this has got to be Marin's story, and through her, we find out about other women conductors.
Well, Marin, how difficult was it? Because watching the film, you got criticism at times that observers say would have never been directed at a man.
I'm sure that's true. I mean, it's very difficult to ascertain where people's motivation is when they're critical. It's often hidden, it's often couched, it's often unconscious on their behalf. So I think I would actually attribute a lot of my success to the fact that I tried never to interpret this kind of rejection and this kind of criticism as gender-based. I really tried to be open and say, okay, look, I have to try to be better at what I do. I mean, of course, there are days when you can't do that because you're just fed up. But I do think that there were many times, I think, along the way when I thought to myself, I can't imagine anyone would say this to a man.
Yeah. Listen, we're going to come back. We have to do a little bit of news, but we're going to continue talking about this new documentary called The Conductor. It's on and really talks about Marin Alsop and what she has dealt with and what she has achieved. Music director of the Baltimore Symphony Orchestra. She's going to come back with us, as is Bernadette Wagenstein. She's the documentary filmmaker of this film. She too with us on the phone from Baltimore. And as we said, having the world premiere at the Tribeca Festival, which didn't happen last year, but it's back up and running this year and happening right now. You're listening to Bloomberg Business Week. I'm Carol Masser. Out to D.C. we go, and Nancy Lyons for Check on World and National News. Hey, Nance.
Hey, Carol. G7 leaders are tackling the economy as they meet in the UK. British Prime Minister Boris Johnson is the meeting's host.
I think there is the potential to generate many, many millions of high-wage, high-skill jobs. And I think that is what the people of our countries now want us to focus on.
Johnson says any recovery needs to focus on building back greener and more equal. Some, but not all, of a troubled vaccine manufacturer's Johnson & Johnson COVID shots will be allowed to go to the market. Bloomberg's Nathan Hager has more from Washington.
Sources tell Bloomberg News the FDA is authorizing 10 million emergent-made doses of Johnson & Johnson's vaccine to be released. In a statement, the FDA says after a thorough review of Emergent's facility, 2 batches of the vaccine's underlying drug substance will be released. The manufacturer has said it's made more than 100 million doses worth of the vaccine's bulk drug substance. For months, that supply had been in limbo after Emergent staff accidentally contaminated millions of doses. In Washington, I'm Nathan Hager, Bloomberg Radio.
Attorney General Merrick Garland says in an effort to safeguard Americans' basic right to choose their government, the Justice Department will double the staff working on voting rights issues within 30 days. They'll focus on new voting laws in 14 states that he says ultimately undermine voting rights. He says his department will provide new guidance on early voting, mail-in voting, and post-election audits. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Our Bloomberg Business Week weekend show features our interview with Maxine Beda. She's founder and director of New Standard Institute. It is about her book entitled Unravel, The Life and Death of a Garment. In this excerpt, Maxine explains the devastating effect fashion has had on the environment.
In the book, you know, I got to go to China and see these rivers that are black. And then I went to Bangladesh, and the rivers became even more black. And Ghana at the end, which was, you know, the most black rivers, you got to actually see the impact that our clothing has. And that's something that is such a huge shift from even a generation ago, because in the 1960s, 95% of clothing that Americans wore was American-made.
Right.
Today, that's less than 2%. So we don't see the impact that our clothing has, but yet it's enormous.
And the rivers are black. I'm assuming it's runoff from the manufacturing and dyes or what have you?
Yes, exactly. So, you know, in order, like, what I wanted to detail in the book is just how much goes into creating, you know, the clothing that appears online or appears in, you know, in the stores. And to create, you know, to take this either cotton fiber or more likely polyester, which is a fossil fuel-based fiber. Going through this process has changed my relationship to clothing for sure. And you know, I see the work that goes into it. I see the resources and the environmental impact that it has. And so I've definitely changed the relationship to my own wardrobe.
And that was Maxine Beda, founder and director of New Standard Institute. Her new book out, Unraveled, The Life and Death of a Garment. You can hear more of that interview on our weekend show on Bloomberg Radio, also on our podcast feed at Bloomberg.com. Coming up, we're going to get back to talking about the new film, The Conductor. We're going to get back to the director and the subject of the film. That's coming up on Bloomberg Radio. I'm Carol Masser, and this is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
The focus turns to the Federal Reserve. We will have a Fed meeting and decision next week. S&P up today by 8 points, up by 0.2%. Equities eking out a gain. S&P at a record 42.47, again up 0.2%. The Dow up 13, up less than 0.1%. Nasdaq up 49, up by 0.35%. The Nasdaq 100 index up today by 0.3%. 10-year yield 1.45%. 10-year Treasury yields holding it around the lowest since March. Gold down 1.2%, 1876 the ounce. West Texas Intermediate crude up 0.7%, 70.80 a barrel. I'm Charlie Halifax, Bloomberg Business Flash.
Yeah, one of the big stories of the week, that move down in yields. All right, Charlie, thank you so much. And this is Bloomberg. And that is Maren Alsop. She is music director of the Baltimore Symphony Orchestra. She is conducting the Baltimore Symphony Orchestra in what you are hearing right now. She is still with us on the phone from Baltimore. She is the subject of a new film out. It is called The Conductor. It is directed by Bernadette Wegenstein, who also joins us on the phone in Baltimore. Hey, Maren, what I wanted to ask you is, when you finally sat down and watched this film in its entirety, how did you feel?
Well, I mean, I think I shouldn't, it would be disingenuous if I didn't say the thought of sitting and watching myself for 90 minutes was the most unappealing
Fair enough.
I ever had. But that said, I have to say that I felt that it was really my voice and really my story. I think Bernadette did a fantastic job. Of course, I've seen it along the way, and we've talked about the narrative behind it. But the way Berna made the music a character, it really brought music to life as a companion in my personal journey. So, I mean, you know how it is. One is so self-critical always. I mean, I just think, oh, I look tired, I look old, I look fat, I look short, I look, everything that you can imagine. But that said, I think it's really the honest portrayal of my story. And I don't think I can give a greater compliment.
It's a wonderful compliment. And Berna, how did Mara's narrative, how did her music, impact how you told this story? Because you also go back in time when she was a little girl, and what really sparked her to do what she is doing today. You did a recreation, actually.
Mm-hmm. Yeah, well, first of all, it's wonderful to hear Maren say that, and as you say, it is such a compliment. And I think in any journey of telling a story or creating something, if you're on the right track with the right people, then you're lucky. And this is the case of this film. I had an incredible story to tell, and I had an amazing editor in Vienna who is also a classically trained violinist. And together, Stefan and I really thought about the dramaturgy and the storytelling, almost like a symphony, not that we could ever write one, but we were really following the music that Maren was performing and thinking about how we can use it and what the music is saying in each movement, let's say, of Mahler's First, in the way that it also tells the story of what Maren is feeling in the moments that we're showing her. So the reenactment with the little girl, for instance, there's a part, I don't even remember exactly what it's called, Maren will know, but we always called it the lullaby, of Mahler. And I always knew I wanted to use that song for the memory. And I think that, yes, the images of the girl bring us back, but I really think that the music is taking us there as well. And so these were the ways that we, stitched it together, and we made the music into a character, which was an incredible opportunity to do that and to learn a lot about classical music, in the process of making the film.
Maren, talk to us about Leonard Bernstein and how much of an impact he was on you.
Well, of course, he was a huge influence. He was my motivation for wanting to become a conductor because my dad took me to a concert when I was 9. And he came out and he started talking to the audience and jumping around. And I thought, oh, this guy is having a great time. For me, classical music was already a little too stiff. And I thought, okay, if I'm the conductor, nobody will yell at me. That's what I'm going to do. So he was my big hero. And growing up, I had 2 posters in my room, one of the Beatles, whom I adored, and the other of Leonard Bernstein. So those were my musical heroes. And then eventually when I was... I became a student of his at Tanglewood and got to study with him, and I would say in the end became very good friends as well. And he was my hero, but he exceeded all of my hopes and dreams. He was a wonderful human being, very generous, very giving, and a great citizen of the world, which was another wonderful lesson for me.
It's nice when your hero exceeds your expectation. When did you first meet him, Maren?
I first met him at a distance, probably when I was about 14, but I was terrified to ever speak to him. It was like, your first crush, and you're paralyzed when you're in the presence of the person. So, but I finally got to study with him when I was it was in my late 20s, actually. And I went to the Schleswig-Holstein Music Festival, and it was really a dream come true.
Bernadette, in looking at this, now that it's complete, what's your takeaway, and what do you hope people who see it get from this film?
Well, I think that I want people, to ultimately feel the way that the little girl puts it at the very end. If Maren Alsop can do it, I can, which of course, is easier said than done. But we put it in there because it came so honestly out of her. And she's a girl in the Orchis program that Maren founded as well in Baltimore. But I think that what happens to an audience and what I want them to experience is falling for the character's story, going through her, catharsis, just in the kind of good old way that storytelling takes you to all the places that the character goes through,
right,
and really falling for her and admiring her, and at the same time falling in love with classical music, to go back to what I said earlier, right, and to really enjoy the power of musical storytelling, classical musical storytelling that is, constructed like, a novel, or really any story that can tell you all the emotions, of this world.
Well, it's beautiful. It sounds beautiful. It's a wonderful tale. It's a real tale. And Maren, we can tell you're still making your mark on our world, and we're lucky for that. So thank you both for stopping by. Really appreciate it. Bernadette Wagenstein, she is the director of the film, the documentary, The Conductor. It is about Maren Alsop, who is the music director of the Baltimore Symphony Orchestra. So be sure to check it out, as I mentioned, world premiere at the Tribeca Festival. All right, coming your way in just a moment is Joe Matthew. He is taking you through the hour of Sound On, all that's happening in and around D.C. Joe, what's on your plate today?
I've made my way to Boston since we met yesterday. Carol, it's great to be back with another edition of Sound On. I'm in this gorgeous Bloomberg Boston Bureau overlooking the city, and we're kind of making our way slowly to D.C., where I will end up on Monday, and Sound On will be back in the nation's capital. But we're following events overseas. Half of Washington is in Europe right now as the administration gets the G7 officially underway. And Carol, we're looking ahead to the big meeting, the main event, as so many are calling it, with Vladimir Putin next week. Yeah. And we'll be starting off with Bloomberg's own Nick Wadhams. He's preparing to go over there to cover that, and he's going to be at the top of the program on Sound On.
Good stuff. Looking forward to it. Sound On with Joe Matthew coming your way in just a moment. Of course, check out the cover story and check out our radio show and podcast. It's all about Margaritaville. Have a good weekend, everyone.